All right. All right. So I think everybody's muted. So welcome to Forex Fridays. I wish you and your loved ones safety in amongst everything that's going on in the world right now. Hope you guys had a fantastic trading week. Hope you risked properly. Hope you didn't over leverage. I hope you took your time trading this week. So we're gonna go through a couple topics. We're gonna go through the weekly range review. Then we're gonna jump right into dead zones. Then we're going to talk about market speculation. And then from there, we're going to kind of branch out to other ideas and topics as well, whether that includes daily bias recognition, whether that includes swing highs, swing lows, purge and revert, whether it involves if the any other concepts that I like to use when it comes to speculating price action in general. So stay tuned. And I will try my best to check the chat periodically. So I'm gonna make sure I share my screen this time because last time I did not share my screen. So just let me know if you guys can see my screen. I definitely want to make sure that's taken care of. Mm, 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 mm. I believe I am sharing. So we're all set. And yes, this will be recorded and placed on YouTube. Cool. All right. So we're all set to rock. So we're going to start off with gold first. And as always, what I like to write out on my chart is the opening price. I have it saying Asian open, Sunday open. It could be used being an Asian session trader. So this is Sunday open, the weekly opening price. So this is where the weekly candle starts. So this price point here, 2049.155, is the opening price to the weekly candle. That is fair value. Anytime price gets above that price point, it's immediately going to be in a overbought condition for the weekly bar. Vice versa. When price gets below that Sunday opening price in a discount, that's going to be oversold. It's less valuable. It's going to be in a discount. And these conditions is where you're most likely going to find the best probable setup for its relative side. So for a discount, odds are you're going to find better buy conditions here. And for a premium, odds are you're going to find better sell conditions. Just looking at the overall scope of the week, we can see that Monday was the high of the week. So let's take Sunday as an actual day, even though it's not a full day. Let's just look at Sunday and Monday as if they were separate days. You can see Sunday's high technically is rated here by Monday, and then price continues to sell off. So on Monday, it makes the high, and on Wednesday, it makes the low. So we have a very typical bearish week here. Generally speaking, if the weekly candle is going to draw lower, it's going to form the high of the week on Monday, Tuesday, or Wednesday. That's your most classic profile. Monday, Tuesday, or Wednesday is going to create the high of the week, and then potentially Thursday or Friday will be the low of the week, and then it will close. So that's how a bearish week would normally unfold. We can see outright Monday is the high, and it just continues selling out throughout Tuesday and Wednesday. There are going to be times in the market where you would like to get that premium sell, but most times we know that that premium opportunity does not last long. And the same thing can be said vice versa for a buy condition. So like if we were to briefly look at DXY, you can see for DXY, discount, what was the low of the week on a Monday? It even did the same thing. It took out, let's say, like I said, let's technically say that Sunday was a day. Does it break it? Let me just double check. Looks like it just made a double bottom with it. Low 113. So it made a double bottom there. And we can see Sunday or Monday was the low of the week. And ever since then, price has been bullish, just running straight up. But generally, in a bullish week, you're going to see Monday, Tuesday, and Wednesday make the low somewhere below the weekly opening price and then push to go higher. Thursday would be either the high of the week or Friday. Here we can see Wednesday was the high of the week. So a little off of what we would normally expect for the market profile. But generally, I would like to see Thursday be the high of the week or Friday be the high of the week. Now, let's look at something like EU. Now, I know I didn't have this set up yet right now, but I could briefly do it for you guys. So, as always, we would go to Sunday, 1700 right there. I have people ask me what time does the weekly candle open? It's right there, 1700. Let me mark off Monday, mark off Tuesday, Wednesday, Thursday, and Friday, going into Friday close. Now, if we draw out the opening price, it's the same thing, just almost similar to gold, right? Because we know gold and all the other euro fiat currencies, and when I mean euro, I'm talking about not just euro dollar, I'm talking about British pound, I'm talking about New Zealand dollar, I'm talking about Australian dollar, I'm talking about those when I'm talking about euro fiat currencies. We can see how price comes up and sells. Where was the best sell condition for the week? Above this line here. This was the weekly open. Now, I'm not sitting here saying I was predicting where the high was going to form or where the sell opportunity was going to unfold, but most likely, in a broad general statement, it's most likely going to occur above the opening price because it's ideal for a sell condition. We want to sell at the highest price possible if we're going to be the seller. If last week going, let's say last Friday, we're going into the weekend, and I did my technical analysis, my fundamental analysis, and I speculated that price action was going to move lower next week. The weekly candle was most likely going to draw for lower prices. I would be hunting and looking for price to move above the weekly open at some point in time. I would generally look for it on a Tuesday or a Wednesday. That's when I would look for it. But we can see it doesn't happen here. Instead, we get that Monday, right? Monday. Actually, Monday is not even the high of the week. Sunday here is the high of the week. And from Sunday, then it just continues to sell off. So those are certain profiles that I normally would not want to trade. And there are some weeks where you won't get that condition that you would want. You don't get Tuesday, being the high, or Wednesday being the high, and price doing this and then selling off, and then probably retracing and then closing off for the week, or vice versa. Instead of it being Tuesday, it could be Wednesday, price trading, drops down, drops up. Wednesday comes up, then Thursday makes the low of the week, and then it closes off like that. Those are the profiles that I normally like to hunt for, but you're not always going to get that profile every single week. It's not going to be cookie cutter like that. There are some weeks that can be a little more difficult to trade with. And I can admit that myself, publicly saying that there are some weeks I don't like to trade because it just doesn't give me that ideal condition. And if it doesn't give me that ideal condition, I can still do day trading or scalping. Got the Asian session model, or have the New York session model or the London session model. And I could use those small non-daily bias setups to find at least 10 to 15 pips out of the market if I have no idea where the market's going to go. So let's take a look at gold. And I wanted to look at this example here. So we're going to go down to the 15-minute time frame. We're going to turn on the sessions indicator here. I'm going to delete this. Now looking at Wednesday, so we're transitioning into the dead zone period because this was a question that somebody had. Between this time period, 5 a.m., or between London and New York, between this time period here, right, where it's not colored in, it's just completely shaded white, this is a dead zone. This is one of the dead zones, and we'll get into all the other dead zones as well. But this is just a good example to how I would go into the New York session if I had no idea on where the market is going and I needed something to formulate, right? I'm a day trader and I really want to get a trade this day and I just have no bias. What I would do to try and find a way to get a model in the market is you use the dead zone here. So I would mark off 5 a.m. to 7 a.m. So I'll mark this off from here 5 to 7 and then to 10. So this is very similar to the Asian session model. So just looking at this here, we can see we have, let's bring it back a little bit, right at 7, right? Because that's the whole zone here, the dead zone. We have this as buy side liquidity. Why is this buy side liquidity? Well, it's because this is a swing high. It's the most obvious point of where market orders will be residing. If somebody went short along the lines in this zone here, where would they most likely put their stop loss? Above a swing high, which is here. Now, looking at this market as well, what swing lows do we have available to us? We have this one here. And that's what? Sell side liquidity. Why is this a swing low? Let me double check that because it looks like the candle on the left is a little lower. Nope, this is the swing low. Yeah, it's just lower than that one. So that's the swing low because the candle on the left is higher and the candle on the right is higher. So that's the swing point between these two candles here. So swing point takes 3 bars. It's not 4 or 6 on the left or the right. There's some people that say you need 3 candles on the left and 3 candles on the right. It just needs to be one on the left and one on the right. That's it. That's a swing point. Same thing here in this example here. This is a swing high because the candle on the left has a lower high and the candle on the right has a lower high. It doesn't need to be all 5 candles to confirm that, but it just needs to be a lower high on the left, lower high on the right. That's your swing high. So we have sell side here. We don't have any others, I believe, and we do right here, right before 7 a.m., right? So this lands right before 7 a.m. So that's a swing low. So we have some liquidity pools available to us. We know the market likes to chase liquidity. And liquidity comes in the form of what? Old lows, old highs, or swing highs, or even inefficiencies. So at this point, this is 7 a.m. opening price. We mark that out. This is almost as if we're going through the same Asian session model. That's 7 a.m. So the same ideology that we're talking about here. Anything above it is going to be what? A premium. So once price gets above that opening price, it's going to be in a premium. So you see price gets above that. And we also have a swing high here. So I missed that swing high as well. So a swing high here right before 7 a.m. And that's buy side as well. So price opens or runs up. Immediately, like I said in many videos before, the way I like to break it down to myself, this may not be true, but I like to paint the story in my brain this way. Retail traders like to start the session, commercial speculators or the market makers like to end the session. Meaning, when the session starts, everybody is trying to rush into the market and chase price. That's how I view it instantly. As soon as 7 a.m. starts, everybody's flooding the market. They're trying to buy, they're trying to sell, especially if they're seeing candles being printed strongly in one direction or closing in a certain direction. You know, you hear a lot of people justify their stance on the closes of candles. Oh, the candle closed above this high, so I'm bullish. Or the candle closed below this low or this level, so I'm bearish. So they kind of got this certain filter, right? Or this retail filter that they have to justify where price is going. And I personally don't vouch by that. I like to wait it out. I want to see a purge, right? The whole idea is to purge one side and revert back. That's where your best opportunities are most likely going to unfold in that reversal pattern. It's pretty difficult for some people to catch the retracement or the continuation, but when it comes to the reversal pattern or the reversal phase, I find it to be the easiest phase to catch because you already have obvious levels that are marked out for yourself. You already have the buy side liquidity, you already have the sell side liquidity available to yourself. So you could wait to see what side of the market is rated. I apologize. So we got swing highs, swing lows. So when price goes up, we can see instantly it breaks the swing high here. What would you do? Or what would Deontay do? At this point, I would go down to the 1 minute time frame. What am I looking for on the 1 minute time frame? Some type of entry technique to get me in short because price is over brought for the session at least. So let's go down to the 1 minute time frame. So we're above 7 a.m. And what are we looking for? Most likely some type of fair value gap to the downside. Now, in my experience, I like to wait for the fair value gap that breaks the swing low. There are other times where a fair value gap will form, and it could be the best entry possible, or the entry that holds up the idea, and you don't go into more drawdown than expected. So let's see what happens. Price breaks that 15-minute swing high here. Did we get any entry technique yet? No, nothing yet. Nothing. Nothing. We don't see no fair. You can see, notice all these 1 minute candles are forming. There's literally no fair value gaps. Nothing. Some may argue this here, right? Very small. You can notice this one right here. It's really small. So let's mark it out just to show at times that first fair value gap may not be the one that you want to take. And that's a very small one. So that might be one that you may not want to take, right? Let's keep playing it through. Price finally gets up to this 15-minute swing high. So it finally gets there. We still don't got no entry technique that I'm looking for. Let's see what happens if we play it out. We do get a fair value gap to the downside. We also get a fair value gap to the upside. So we got a balanced price range here, BPR. I know a lot of people like that idea as well. I personally don't use it, but I do know about it. So you got the BPR here, fair value gap up, and then a fair value gap down. So this looks like what? The buyers are trapped to the wrong side. Because what? This large candle does what? It gets everybody to chase. Think about the ideology that Larry Williams talks about. Large candles get people to do what? Chase price. Let's just go over real quick. Here we have it. Here we go. Large candles. All right. This is just a good example on the daily time frame because price is fractal. Doesn't matter what time frame you're looking at. You can see all these ideas and ideologies on all time frames. The duration of it just it's a much smaller or much longer depending on the time frame. So since it's a daily, obviously it's much longer. So you can see how we got a small candle, but look how large it is. What do you think retail traders do after this Friday run up like this? They start to speculate that it's going to go higher. So what did they do the next day? That next Monday, they all go long. What happens Monday? They go nowhere. Not to say that they couldn't have been profitable this day and it could have went up, but the odds of that being another large day up is probably less likely. So you would want to avoid trading after large days like this. And plus, you wouldn't want to trade on a Monday at all, anyways. So there's a lot of things that you would want to incorporate, a lot of filters, of course, and you'll get a hang of it as you go through your trading career, what you like and don't like. Because people will ask me questions, and I'm very direct about what I like and don't like. That may not be 100% of the time that it comes to fruition, but I've been already cementing the concrete of what my model is. You can't change the model for me at all. You can't convince me of something else now because I'm a veteran. If I was a rookie, you might have been able to persuade me that, oh, this is right and this is wrong. As I've been trading for the last 6 years, this is what I know, and this is it. I've already flapped my wings and I took off from the nest, and I'm not going back. Notice after this small day, what happens again? Another large day, and everybody's mad about Monday because they're like, "What? I knew it was gonna go up, but now the next day it goes up. But I went full margin on Monday, and I blew my account just for the markets to go in the direction I wanted it to, because it's a psychological battle. They're luring traders to the wrong side. Large candles lure retail traders. And I said here, I'm not a sheep. I'm a wolf, or I'm an informed trader. I don't like to sit here and say, "Oh, I'm an SMC trader," because SMC is not a real thing. Smart money concepts is not a real thing. Small candles allow me to start hunting. I'm just informed. That's what I like to tell myself. I'm not an ICT trader. I'm not a Larry Williams trader. I'm not this kind of trader. I'm just informed all in general regards. I'm informed about how the markets generally move from time to time, day to day, month to month, week by week. So that's what we're seeing with this large candle up, right? That's excitement, right? When people physically see a large candle like this and a strong close above candles, what does that look to them? It looks bullish. And this also trickles right back into a Larry Williams concept. So those that are familiar with it, because I know some people may not be, but those that are familiar with a Larry Williams smash day candle, this is a smash day candle because this candle is opening, running up, and closing above several highs. So it looks bullish, but notice the context behind it. It just ran a 15-minute swing high during this dead zone. What dead zone is this again? This is the London lunch. It is 5 a.m. to 7 a.m. No trading is permitted here. Now we're going into the New York session at 7 a.m. to 10 a.m. And all these times are New York Eastern Standard Times. I didn't make the rules. It is what it is. For some reason, whoever coded the market, it all runs on New York Eastern Standard Time. Whatever the stock exchange time is, that's the time it runs on. I didn't program it. I've been taught it that way. Yeah, that's just how it is. So I know many people live around different parts of the world, so you might have to understand and calibrate, oh, what time is it here in New York to know what time the sessions are starting or ending. And you can simply do that by changing, I think on TradingView, you could change the time zone thing right to New York. I technically wouldn't have to do that because I live in New York. So my clock already, when I pick up my phone every day, I have the New York time. But for those that don't live in New York, I believe this will set it automatically to the New York Times. So you're not confused. So we have a Larry Williams smash day candle, and Larry Williams would tell traders to go short at that candle's low. So if you get a candle that closes outside all the candles ranges, you would go short here with a sell stop. And we can also see there's a lot of confluences here as well in this example. We got the balanced price range. We got the purge on buy side liquidity, not one level, but two levels. We have a fair value gap to the downside here. And we also have what available to us? Sell side liquidity. We're also where? Above the New York session's opening price. We're in a premium range, premium territory here. And New York open. And we would look to go short at this candle's low. So this is another entry technique that people overlook. Go short at that low, or you choose to go short in that balanced price range, or you wait for the other entry technique that I prefer. Swing low broken with a fair value gap. So we'll get rid of that first fair value gap there. You notice how that fair value gap puts us into drawdown too. Look how quickly price gets back to the open of the New York session because it's creating what? A Judas swing, right? It's creating that power three. It's going to what? Accumulate, manipulate, and distribute. Accumulate, manipulate, distribute. Accumulate, manipulate, distribute. AMD. It's all fractal. The same way we could see it from the Asian session to the London session to the New York session, you can see it within the sessions themselves. It's a very complex system. And like I said, whoever coded this market had to have been a genius because it's more than what I can comprehend at times, you know? And the fact that you can see it on all time frames is absolutely astounding. So you can see at one point in time, price does run up, it starts accumulating the orders, right? What is happening here when it goes back and forth in the range? That's buy side orders and sell side orders accumulating inside this range. Now, I don't like to draw consolidation boxes because I think they're very subjective. And the reason I say that is because everybody would draw their consolidation box a little differently. Some people would argue and say, oh, this is the high of the consolidation box, or this is the low of the consolidation box. I don't like to do that personally. I just like to visualize, okay, we see price gyrating in a general census of area. And I like to see when price starts to give large candles outside of that range, right? Because you can notice the candle sizes. Look at the candle sizes, large and small range cycles. It's important. Look at the candle sizes inside this range. Look at it. Small, 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 small. They're so small. And then we start to get larger candles. All these candles here were larger than all these candles here in the past. Majority of them. And then we get candles moving down and then back up real quick to take out that buy side liquidity. So we sell. This is a smash candle. I'm gonna go sell here. And this is a smash candle. Right, that's why. That's a Larry Williams methodology here. So you would sell on that candle's low simply because it's closing above several highs. And we can show this on the daily too. We can show this on the 4 hour as well. We could show this on the 15 minute, the 30 minute, whatever time frame you want to look at. Guarantee you we can see examples like this happening time and time and time again. It's a very simple entry technique. It's very powerful at times, especially the higher the time frame you use. And we can see price gets right back down to what? Fair value. The opening price is fair value, not to confuse anybody. Fair value just means opening bid, or fair value means it's not premium and it's not discount. That's what fair value means. It's the equal quoted price, the opening bid. So you can see how price moves up, accumulates, you got your manipulation running up, taking out highs, and then what happens? Distribution occurs. What does it target? That 15-minute swing low. Let's go back to the 15-minute. And then as you start to see this, you start to notice that this is a very dynamic pattern that the market does, because as traders, we're trying to comprehend how the market is most likely going to give us the candles and how it's going to unfold in a certain direction. I'm showing you the way it unfolds. It's a very natural thing. It's not a forced idea. The idea that I'm showing you is not forced, because we can see it on every time frame. We can see it inside these sessions. We can see it with the monthly chart, the daily chart. What what just occurred is a purge and revert. I heard somebody in the Telegram chat ask that, like, is the purge and revert that swing low pattern that I show people, or the swing high pattern that I show people, is that something that Larry Williams coined, or it was in his book or something? No, it wasn't in his book. It's just common trading knowledge that I would assume most traders would know when going into the markets, no matter what you trade. What just happened? Buy side was taken. What available sell side liquidity do we have left? Down here below this swing low. Look at how price gets there. Now, does this happen every single day? Yes and no, because it all depends on the pair you're looking at. Because you could be looking at gold and it happened on this Wednesday, right? But then the next day you're looking at AU and it doesn't happen. So it is happening every single day, technically. It just might not be the pair that you're looking at. So, like the Asian session model. So one day UJ may perform well, and another trader may be looking at AJ, and it didn't perform well. It just happens to be the coin of draw, or what pair you wanted to select that day to trade. That's why I try to tell traders, be consistent to the pair that you're going to trade every day. You can't be flipping, flopping back and forth to several different pairs. If you're going to pick one pair, you run with that pair for the next 6 months and see how it performs. See how this model is signified, or is it significant enough inside this pair? If not, change the pair and back test another pair. Asian session model. What have I only been testing with the Asian session model? UJ. From episode 21 to the current episode now. We're at episode 27. And we're on our way to episode 100 one day, and so on and so forth. But notice I never changed the pair, and the entry technique never changed. It's the same thing I just showed here, but with the New York session. Price sweeping the buy side and going back down to sell side liquidity. Premium is your ideal condition to find a sell setup. And if we were to look at it again, I know there are many different entry techniques that people would have taken down here. Now I'm not going to point them all out, but you can see there's probably multiple ways that people could have went in short on this leg down. And just to double check, because I think my entry technique did unfold, and it did. Did it? No, it did not. It looks like it did. Did it? It would have been this one. If this candle was a little higher, this would have been a fair value gap through the swing low, come back into the fair value gap here, and then go short. But here we didn't get that entry. We weren't able to get that entry technique I would prefer. And price continues to drop down. Unless we did. Let's just double check. Yeah, it looks like we did, but a little later and lower. It's still a premium though. Here, there goes. Nope. Guess it's not. And why is this not one? Because you can see how that fair value gap starts here, but that swing low here is not inside that range. So I wouldn't count this as one. It's very close to one. So I'm very picky with what my entry technique is. It needs to be inside that fair value gap. So we didn't have my entry technique, but fair value gap, it's a very obvious one here, right? Have price coming up, coming down, coming back up, failing to break this high, right? Price trading down between the lowest point in between this high and this high here. Price trading down, trading right back into it, right? The mitigation block, trading lower. So there's many different entry techniques here, not just one. There's many different ways you could look at it. But as long as we arrive to the same idea of, yes, we want to sell, we want to be a seller. because we're in a premium. And we took out the London lunch 5 a.m. to 7 a.m. buy side liquidity to return back down to sell side liquidity. And there you go. Buy side taken, sell side taken. And this is something that happens on all pairs as well. I don't want to sit here and say I know which pairs it works best for because I haven't back tested all of them. I haven't. I've back tested UJ so far and forward tested UJ so far with the Asian session model, and I can say it works very well with UJ. I haven't back tested all the other yen crosses. I haven't back tested AU with the Asian session model. I haven't. But are there moments and times where it does happen? Yes, it does. Is there moments in time where the Asian session model plays out for gold as well? Yes, it does. DXY, yes. UCAD, yes. GU, yes, it does. But does it mean is it still consistent enough for you to be profitable? Is it worth your while? Most times it's not. I don't think the dollar crosses AU, GU, NU, which one I left out, EU. I don't think it's worth your while to use the Asian session model on it. That's my answer on it, and that's it. Hopefully that clarifies some things. 'Cause I see a lot of people comment that saying, "Can I use the Asian session model for AU or EU?" And I'm like, you got to back test it, but odds are it's not going to be favorable compared to the yen crosses. It's just you're forcing a pair to do something that it's not primed to do. It's just you can't do it. You want to put it in its least, you know, favorable conditions or favorable conditions. You want to place the pair in its favorable conditions. If Asian session is not favorable for AU, GU, NU, and EU, why use those pairs? It's just illogical. You're forcing something that doesn't even exist. It's irrational. I said before, use the yen crosses because at that time of day, the yen currencies are going to be a lot more volatile. Not the dollar crosses. Dollar tends to consolidate. Why are you using EU in Asian session? Why are you using AU and using Asian session? It's just the logic there kind of just isn't there. It just isn't there. It's not primed to move there. Pick better pairs. Why do you think I pick UJ and only UJ? I'm not saying you have to do that, but if you want to go ahead and force AU with the Asian session model or EU with the Asian session model, go ahead, be my guest and show me the results. I would love to hear the results on it. I could save you time and tell you not to do it. But if you want to use it anyways, do it. Just to see how it does. Get a demo account, open it up and try trading it every single day, the Asian session model with AU, and share your results to the community. And we'd be happy to talk about it. But you can see this idea of purge revert is everywhere. Now let's talk about it on the daily time frame. So this same idea that I'm showing you happens on the daily. It's just in a different fashion. So let's clear this all up. Let's go back to the daily. Let's get rid of all of these academic calendars. Great. All right. So I'm just gonna pick anywhere on the chart. I don't want to pick one where it's proper. Okay, this one here. So right here, I'm gonna just look at this area right here. So pretend that you can't see, and it won't let me draw it over there, huh? Yeah, it won't. I was gonna say pretend you can't see this candle here. You can only see one, two, three. That's our main focus, right inside here. So this highlighted area, those three candles, one, two, three. Pay attention to the way it's forming. Think about the structure and how it's doing it. This middle candle, right? What does this middle candle do? It's taking out the previous daily low. What is that? That's purging, right? Because it broke something. It purged it. It purged it. So this candle gets purged by this candle here. Then on Tuesday, what happens? Tuesday does not continue that purging, right? Or that continuation to taking out sell side because we can see it clearly isn't broken the next candle. What happens instead? It reverts back to buy side. It doesn't follow the nature of Monday's candle. It changes. Its nature is now to take out buy side liquidity. Why is that? Because it's a swing point. And we can speculate, obviously in hindsight, we know it continued trending higher, but we could speculate within this swing low, The commercial speculators or the market makers have repositioned themselves to go long. Now, this might go over a lot of people's heads because they're like, "What? Why are you thinking about it that way? It's so irrational." It's not actually, because as you start to see how daily bias unforms, because you got to teach it to some people because they don't understand how the market trends bullish or how the market trends bearish. They don't truly understand the nature of it. It's a very subtle thing, but everybody's overlooking it. I look at everybody else on YouTube try to explain daily bias, and there is one ICT video that I watched. It wasn't even part of paid mentorship either. It was all free. It was all free on YouTube because people like to skip. And when you skip around, you don't really get to hear some of the subtle tips or gems that ICT does have to offer. I know there's a lot of content and material to watch, and a lot of it might be confusing to comprehend. But there are some that are very simple that he has out there on YouTube before paid mentorship. It was all free on YouTube already. And it taught me daily bias. And I said, wait, this is how you find daily bias. And I watched it and I went and back tested it on a daily chart, just like he did in the video. And I said, oh, so it's all the swing points that really make the market. You need to be following the swing lows and the swing highs. And we can see a swing low is made right here. One, two, three. If we look in recent time, where's the next swing low? It's down here. This swing low is higher than that one. And in my experiences, I notice in bullish trends, higher swing lows are formed and higher swing highs are formed. But in this formation, one, two, three, only takes 3 days. In this one, it takes 3 days. Sometimes it takes a little longer. For instance, because I don't want to confuse anybody, I want to find a good example. There we go. Okay, this is a good example. Yes, the market does trend down here, but this is just an example. One, two, three. Is the middle candle's high broken on on that third candle? Technically, no, it's not. It happens when the next candle happens on this candle instead. This Friday candle. But we can see the market had other plans and it continued to sell off. But look at the notice difference on this. The third candle does not break that candle's high. The next candle does. And sometimes it's not even this candle. Sometimes it takes a couple more days to really confirm this swing low here. It's not confirmed when it's here. At this point, this swing low is not confirmed. It's not. By definition, you have one because there's a higher low on the left and a higher low on the right. So that's a swing low. But what I learned by reading Larry Williams' book is you really want to wait for that middle candle, its high to be broken, to really confirm it, to have more odds in your favor. Though odds still may not be in your favor because there's always risk in the market. The market may have other plans, but we can see that the market does break down after that. You can see that there. And you can see it also prints what? A lower swing high. And this swing high here is confirmed. You can see here, its low point is broken by this candle here. It's confirmed. One, two, three. Here it's confirmed. And you can see how that's lower. That's a lower. That's a swing high. That's the highest swing high. That's a lower swing high. One, two, three. Yes, it doesn't look as clean as this one, like an umbrella, right? Or upside down U. But this is still a swing. This is still a swing high. I want you to understand that as well. This is still a swing high. It doesn't look like this formation, like an umbrella. This is still a swing high. Why is this a swing high? Because the candle on the left is a lower high and the candle on the right is a lower high. That's why that's the swing high point there, right there. Can't even circle it. That's why that's that swing high there. And it's also confirmed because the low is broken by this candle here. But notice the steps. It looks like it's taking lower steps every single time. It's such a subtle thing, right? Traders will probably sit here, and like I said, traders will sit here. Let's say they're arguing against me, which I don't mind because I want people to argue against me. I want people to go against what I'm speculating. It's good to have opposing opinions, and the charts will prove to one or the other who's really right. At this point, I would probably hear people say, um, let's say I posted this and I said, "Oh, I see lower swing highs." And I'm speculating it to go lower. Some traders will say, "No, I think it's still going to go higher," right? But we see this subtle. This subtle thing right here, lower swing high, lower swing high, lower swing high. And then what happens? The market just sells off, right? The market sells off and it continues going lower. And then it breaks a swing low. And then you continue to follow that bearish trend formula that I put out on YouTube, or vice versa. But if you don't get that lower swing high and price breaks the swing high instead, then you change speculations and you change the direction on where you're going. You're not always going to get it right. That's the problem. Everybody wants to get it 100% right. You're going to have to get it wrong at some point. You're not going to catch the exact turn on when the market's going to go into that bullish leg for the next 20 days or the next bearish leg in the next 10 days. You're not always going to get that turning point right. You got to submit to defeat, reanalyze, and get back into that bullish trend by following the model, following the formula. So you can see here, there's that purge and revert that we're talking about. It's in all swing points. It's a very subtle thing. But in these two down candles, guess what they're doing? They're buying. They're buying in these two down candles. One and two, they're accumulating long orders. Even though the candle does close down, that doesn't mean there's selling pressure. I don't see how traders connect the dots like that, because they see a down black candle or a down red candle, they immediately sit to themselves and tell themselves and process and say, "Oh yeah, it's gonna sell." It just doesn't make any sense. You got to understand. You got to be informed. That this is why the information out there on in the trading community has to be quality. Everybody can say certain things, but they don't truly sit here and study the market without any indicators. They don't. They start drawing resistance zones, supply zones, demand zones, which is all what? Subjective, opinionated. It's not objective. What I'm showing you here with these formations, best believe that's objective. A higher swing low is objective. A lower swing high is objective. It's not me randomly going here and saying, "Yo, this zone right here, guys? Yeah, yeah, yeah. That's going to be my demand zone, my supply zone, right? That's going to be support." That's not how it works. It doesn't logically work that way. And then you start to see the flaws in retail thinking. It's so flawed at times. And they don't get the best entry points. And they get the sloppiest entries, or they get into deep drawdown before they even get into profit. Why even put yourself through so much heartache and psychological distress when you could just wait on the sidelines? Because as soon as you start getting to those psychological triggers, what do you start doing? You start following the bad habits again. You gotta take your time and process the market. Sometimes that means waiting a full week without trading. I've done it multiple times, but many people can't sit with that. They want to get into the market every day, which is why we have other models for that don't deal with daily bias. Asian session model, New York session model, London session model. Doesn't have to necessarily follow the higher time frame trend, but we can at least find an opportunity to get 10, 15, or maybe even sometimes 30 pips, 40 pips out of the market. And if it is blended into the higher time frame trend as well, then you can see how it runs for 100 pips, 200 pips. We've seen that happen with the Asian session model. But this is a purge and revert. It's purging what? Sell side, and then it's reverting back to buy side. That's what's happening in all these swing points. Same thing down here. This candle here is purging sell side and reverting back to buy side. Ever since that revert right here, right? So let's write it out. So sell side, that's that sell side purge, previous daily low. And then right here, the next candle, buy side liquidity, it should be on the left side. There we go. Buy side liquidity is reverted back into. And after that revert, we can see look how it trends back up. It reverts and it trends right back up. After a down day, small down day, look how large it is. Looks familiar, right? It's not like I'm cherry picking these things. It's the same concept that I learned by Larry Williams. But indicators can't teach you these things. It's a natural range change cycle. People wonder why they can't catch the large days. They can't catch the large days because they're too busy chasing them. because after the large day has already came, you missed the boat. You've missed the party. You missed it. Sorry to tell you. Try another day. And how do you get into the market to catch the large day? You wait for the small day, especially if it's trending in a up direction. You wait for a small down day. Now you have even more odds on your favor. And let's say the next day that you're going into is a Tuesday, Wednesday, Thursday. This is a Monday that's down. Look at the next day. This is Tuesday. Look, Tuesday, it's an ideal trading day. Look how it runs all the way back up. So Tuesday looks to be the low of the week for this week here. For these last candles here, from Monday, Tuesday here, Wednesday, Thursday, Friday. So Tuesday was the low of the week here, and price drops below Sunday's opening price and runs higher. But after the small candles, you're getting that large dynamic range here. Look at this here. It's a large candle, small down candle, large candle again. Small candle, small candle, large candle again. But people are too impatient to catch this move. They know, like I said, retail traders know what's going up. You may got it right. Your speculation is right, but your timing is off. When you're getting to that market long is off. Look again, this is a Monday down. Is this the same dates in here? Well, look at that. What are the odds? I picked the same example. Well, that's so crazy. I didn't mean to. But that's literally the same example I think I'm looking at right there. So Monday 2022 or is it 2023 I'm looking at? No, I'm looking at 2023. So still similar. See, it doesn't matter. It's a whole another year later from the example. That this example is in November 2022, and this example that I'm showing is in November 2023. Literally the same structure. That's so fascinating. But notice traders can't catch this large move because they're too busy chasing this. And by the time they chase this, the next day opens, and then some may win because we can see it does run up. Some may win, but some might be in a bad position where they over leverage and the price comes against them and it hurts them. They're down 5%. They're like, "Oh, why can I never get funded?" Impatient. You're not taking your time and being played out. And look at how that bullish trend just starts unfolding. Bullish trend unfolding right there in front of our eyes. Let's take a look at another pair. Let's take a euro USD because then everybody's a big fan of euro. Let's just delete this. Let's do the inverse to what we're seeing right now. Mm-mm. Okay, this is a good example. So this is November 2023. Notice as well, gold was bullish in November too. So EU is going to be bullish too. So I'm also showing you guys correlation as well. It's a lot of things I'm showing at one time. Got to really be paying attention for these things. Let's take a look. So how do we get up here? Get it to December, right when it hits December 1st. Okay, there. How do we arrive to this high on Wednesday the 29th? How do we get here? Let's take a look. Let's take a look. November, mark out this December. That's the full month, the full entire month. Price drops below the opening price here. We notice that. It does it on the first of the month, and it also opens below on the second of the month. So, same ideology, November opening price. Now, I don't know what the seasonality chart was for this at that time period. Actually, I have a folder. See if I have it near me. Oh, perfect. It's right here. This is dollar, this is gold, oil, this is euro. So the seasonal chart for last year for euro in November was it started off bearish It looks like it starts off bearish and then it ends bullish. So it does kind of follow it in some kind of madness, but it outright just goes bullish on the first 2 days. But notice at one point in time, it is below the opening price. I say this many times. If the market is truly going to be bullish or truly going to be bearish, those best opportunities to go long and go short will not last long. You need to be on your P's and Q's. You want to be able to catch the low of the month, you got to be paying attention. You want to be able to catch the high of the month, you have to be paying attention day by day by day by day by day. That's why I do the daily bias updates for you guys. I do it day by day because it's a subtle thing that you need to be paying attention to. And let's talk about those subtle things. Let's walk through this month of November together. So November opens. So we're going into November. Let's say we're going into November clean slate, and we're just following daily price action. No fancy stuff. We're not using seasonality. We're not using COT program, the commercials hedge program. We're not using all those other things. Let's just say we're just a very basic fundamental trader. We like to look at price action on the daily chart. That's it, right? We're not using any other things to give us edge. And I personally don't think you need COT data to trade, but somehow it's so popular, it's not something necessarily need. But we can see open drops down, makes the low. So this is the low. Here we go. That's the low of the month so far, right? I'm gonna say so far because we don't know. We're pretending as if this was brand new to us. So far, we don't know if it could continue going lower. But as of right now, we could see what we could say what a swing low is formed below November's opening price. So one first thing that we observed, swing low forms below months, months open. So we could use that as one observation. So that's interesting. So we got a swing low that forms, and it's confirmed too. Zoom in. It's a confirmed swing low. One, two, three. One purge. This candle purges Tuesday's low, and then Thursday reverts back to Wednesday's high. So Wednesday purges Tuesday's low, and Thursday purges reverts back to Wednesday's high. That's all it is. It's just a subtle swing, right? It's so quick. It catches everybody off guard. It's so quick. Sometimes it happens in 3 bars. Sometimes it happens in 4 bars. Sometimes it happens in 5. A little longer is a little extended, but generally I would say 3 to 4 bars. The commercials are already positioned and they're ready to turn that market around. And everybody's just caught in awe. They're like, "What? It turned around on us? I can't believe it." Yes, it's quick. These people are trying to make money. Price comes up, follow along because there comes the bullish trend formula. Price comes up. Well, let's go back because I don't because people argue this, and I want to clarify this because it's a thought process here. Price comes down and breaks this swing low. So let's say we're following the bearish trend formula because I think people misunderstand me when I do this and like, oh, but it didn't work out. It's good that it didn't work out. Good, it didn't work out. Move on. Price breaks a swing low. Now, what is that? If price breaks a swing low, that's what bearish momentum. That's what Deontay calls it, right? And that's what I've learned from ICT. And one of his free YouTube videos. It wasn't something on in the mentorship when I was paying for it. I didn't learn a lot. A lot of the stuff I didn't learn in the mentorship. Some of the stuff I just learned based off of ICT's free YouTube stuff. Bearish momentum, right? So step one, swing low broken, which also equals bearish momentum. So this is phase one to the bearish. Oops. This is phase one to the bearish trend model. Or bearish trend formula, right? That's step one. What's step two? Everybody knows step two. Wait for lower swing high. So we have to wait for a lower swing high now. I'll put this down here for now. We need to wait for a lower swing high. Let's see if we get a lower swing high after breaking this swing low. Let's see. Do we? We do not. We don't get a lower swing high. Price instead does what? It breaks the swing high. So everything flips again. So we didn't even get to complete the formula. We didn't complete the formula. So we didn't take any trade. There was no equity loss. We didn't get into the market. So swing high is broken instead. So now everything flips again. So now we're in the bullish trend formula. What was we made for now? A higher swing low. So everything is inverse now. Higher swing low. So we got bullish momentum coming into the market. We also broke this swing high here. I'm not going to mark it off. We're just going to mark off the most recent one we have. So we're waiting. We're waiting. We can even see what? What happens here? What happens here? We got what? A fair value gap, right? We got a busy, right? For all the ICT nerds out there, we got the busy. Buy side imbalance, sell side inefficiency. Woohoo. It also what? Breaks the swing high. So that's the same thing as the Asian session model technique that I'm talking about. You see that? For those that are really comprehending and the gears are finally turning, I'm taking that 1 minute entry technique and I'm applying it to the what? The daily time frame. What do you do? It's a fractal idea. What is most likely going to occur if it's going to continue to go higher? It's going to create the higher swing low inside this range. Now, sometimes it's perfectly inside the range, sometimes it's halfway in the range, sometimes it's even beyond the range a little bit more, and then it goes up higher. But we know within this general region, it should create the higher swing low. This is something I've learned by just studying the market time and time again. Play it forward, price comes down, price comes down. Now, is this a swing low? No, no. Is this a swing low? One, two, three? No. Because I don't see a candle on the left that has a higher low and a candle on the right that has a higher low, and there's a lowest point. We don't have one yet, not at all. So we're still what? We're waiting. And where's our recent swing low? Just so we have a reference point of where we should be higher than this is it right here, which is the low of the month currently. But that's our what? Lower swing low. That's it. We don't want to see the next swing low that forms. It has to be higher than this one. It has to be. There's no if, ands, or but. It has to be. It needs to be. Nothing yet. There we go. There you go. Right there. But it took what? A couple days for this to unfold. Same thing again. What's happening in this formation? Friday is taking out Thursday's low. Monday is taking out Friday's high. Friday purges Thursday's low. Monday reverts back to Friday's high. Say that again a little slower. Friday purges Thursday's low. Monday reverts to Friday's high. There you go. At this point, you could look back. At this point, when you get this confirmation, you could look back about 3 to 5 days and see where your recent buy side liquidity pools are. And odds are you're going to target it after getting that purge and revert. Right there. Purge and revert. Look back 3 days from that purge and revert. 3 days from that would be here. 1, 2, 3. This high, which is also coincidentally a swing high. It's a swing high. And this swing high is higher than this one. Think about it. This swing high formation, 1, 2, 3, is higher than this swing high formation. 1, 2, 3. That's interesting. We got a higher swing high. Top left. And this would be lower swing high. Just an acronym instead because I can't fit the whole thing on there. Want it to be clean. And now we finally got a higher swing low. Now, there might be times in point when we do get a higher swing low and price does rate it and then continues going higher. Not to say that does not happen. It does. It does happen. So even with the trend formula, there are still some things out of our control where price action still wants to get more sell side liquidity, book more orders before going higher, get more sponsorship before going higher, get a lot of people out of the trend. So those that might be large funds, right? This is how I like to analyze it or like visualize it. Large funds that might be in on the trend, the commercial speculators or the market makers are going to do whatever it takes to offset them and get them off the trend. So they're going to run their stops and then run higher. And notice how we blast that next candle, we blast right through the swing high, right? The train just goes straight past it, runs right past it. And you can see how it's creating what? Higher swing highs, higher swing lows, higher swing highs, higher swing lows, over and over and over again. We do have a moment in time where it does print a lower swing high here, right there, but we're still inside the bullish trend formula. So we're not really concerned about it, but we can see how we do get the higher swing low. Now, 3, after getting that higher swing low, what should we do? We should be buying. When should we be buying? Now, there's many ways to go about it. You have to decide this as the trader, how you want to take it on. The few ways that I can recommend to you is wait for a down day, wait for it to be a small down day, that double combo there. Buy on every single day going forward, whether that's Monday, Tuesday, Wednesday, Thursday, Friday, right? Buy below midnight opening price, buy below London opening price, buy below New York opening price, buy below Sunday's opening price. Because at this point, you're already in the premium for the month, so you can't be technically buying cheaper. You're technically at this point you're forced to buy at a higher price. Hopefully that makes sense because I said that a couple times. I'm saying at retail traders will be forced to buy in a premium at some point of time during the month because if this month is going to continue trending higher and continue this trend, you're being forced to buy at a higher price instead of getting that best buy. You can't always get this, so you're going to have to resort to buying at a higher price, which isn't ideal, but you can still get away with it, of course. And what would you do? Wait for what? Price to make a down day, or you would buy every single day, or you can optimize it. Let's say you only want to buy on Tuesdays and Wednesdays, or you could even fancier with it, right? You could get very fancy with it. You want to wait for a Monday that closes down, and then you want to buy on Tuesday, Wednesday. You get fancy. You don't have to really stick to one thing. You can optimize and plug and play how you want your models to be. You could be very niched and very specific on your model. Simple is better, of course. But if you could find a way to optimize it and take advantage of the market movements, because you know of certain days where the volume is going to come in Tuesday, Wednesday, Thursday, huge volume, even sometimes Friday. See Tuesday. Look at this Tuesday. Large candle after doing what? Accumulating orders, right? Price is range bound. But where is it range bound? Inside the busy. So at times it's dynamic. It trades right into it and then it trades away. But we can see how we had a couple days inside of it. We had 1, 2, 3, 4, 5, 5 days inside of it, and then it finally takes off. So basically a whole week before it runs up. Move it forward. You got a down day. What can you do here? You could buy at the close with a buy limit, or you could buy at the high with a buy stop. And you can see it's also small as well. It's a small down candle. So we're trying to put out probabilities in our favor to say Thursday, ideal trading day as well. Thursday may be the high of the week too. So we still might have a little more room for that weekly range expansion before it finally tops off into Friday, or even Friday continues going up higher. Notice again, the same pattern repeats. Swing high broken, What should form too as well, potentially a higher swing low. And we also have a busy as well. I'm not gonna mark it off because I want the chart to be clear. We have that same formation I just showed playing out again. Play it forward, and we can see price does trade up and give let's say for this sake, because it closed up and even ran through here, there was a moment in time where you were definitely in profit for the day, buying here and buying here. Now your stop loss will definitely differ amongst other traders because of your equity and the style of trading you're probably going to be taking. But if you're taking a simple approach like this, you're gonna have to be risking very small, right? Whether that's a half lot, a quarter lot, maybe if you have the equity to risk a full lot of your risk parameter, you do that. I can't sit here and tell you how much to risk. A lot of you guys are definitely experienced enough to calculate your own risk according to your equity. And look at that. Buying after a down day. Yes, this candle is small. It's not down though, but it's still small. So it still fits that category of Larry Williams range change cycle. Small, large. But here, look at this candle again. Large candle. I'm telling you, it's not a no, it's a no-brainer. Everybody is going to be yapping their mouth about EU. Everybody on Twitter, on TradingView, on Telegram chats, on Discord, everybody's going to be yapping. Yo, 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 did you see EU? Yo, did you see EU? Yo, I'm long, I'm long, I'm long, I'm long, I'm long. Good luck because they've already baited you in. They baited you with the large candle. They baited you in again. This is a great example. They baited you in again. You're a sheep. You're just like the general public area. The general population is sheep. They don't know no better. They don't know the right foods to eat. They don't know the right books to read. They don't know the right workouts to do. They don't know much, right? The IQ level is not as high. They have common knowledge, average. They're easily manipulated. They're herded like sheep. That's why I called it sheep. They're easily herded like sheep. That's why ICT also said the Judas swing, the Judas. They bring the sheep into the slaughterhouse to get people on the wrong side. Retail traders are sheep. Now, I'm not here to discredit retail traders because I am a retail trader. It's not like I'm trading with millions of funds. I'm not. But on the flip side, I'm still informed because I understand how this market is being printed to us day by day, day by day, day by day, day by day. People want to argue and say, "Oh, I know how to read price action. I know how to read this." And then when it comes to the time to talk about charts and send me a chart, nobody sends me a chart. Everybody wants to just speculate, but I don't see the chart ever. Yeah, and I don't like that. I personally like when someone tells me, "Yo, I'm bullish on this," and they send me a chart. I'm like, "Okay, cool. I'm glad you were able to one have the courage to publicly display your chart." Because people can really talk bad about about anything. You put anything online, people are gonna badmouth you. Anything. Oh, you're silly, you're ignorant, you don't know no better, you can't read price, you suck at trading. Blah, blah. Everybody's gonna say something bad. You're always gonna have haters. That's the way it works. But then you let the chart speak. You let the chart speak. And second, even if you're wrong, it's good to understand that one, you had the courage to put it out. Two, at least you're thinking, you're not just out there just speculating off of indicators and supply and demand zones, right? Because if we go ideas, right? We go to ideas and look at what we see. It doesn't take long to go too far to see certain things, right? Doesn't not trying to give this person any free advertising on my channel or anything, but we're gonna use them as an example here. Look at the indicators. Come on. Look at the indicators. Descending range. Like, I don't even know all this stuff. I don't even know these things. Retail traders will probably come talking to me as if I know this. I truly don't know how a 200 moving average works or a 50 move. I don't even know. I literally do not know how indicators work because I've never used them. I've never used them. Or I've never used them to the point where I've actually concisely understood them and used them long enough to actually say, "Oh, I know how this works." I don't have any idea how any of this stuff works. No idea. but it doesn't take long. You don't have to look too far. You don't have to look too far. Resistance zones, pullback, upward channel. I don't care about no channel. And when the channel this is objective. Sorry. Wish it was. They wish it was objective. This is subjective. Folks, this is very subjective. The way this person had drew this channel on their graph is definitely subjective because I could have drew the same channel and it could look completely different to this traders. So we don't even have real metrics here. We're not even working off of real levels. I can't comprehend that. And I don't like anything that is subjective. We need to be more objective. Facts over opinions, assets over liabilities. That's all I'm standing for. Large candle, small large. So everybody went yapping. Blah 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 blah. Yo, did you see EU? Did you see EU? Everybody's gonna go around trying to flex how much money they made, right? Or there's gonna be people that are flexing like, yo, I made money on this day. Congrats to them, right? Next trade. That doesn't mean nothing because all that money could be gone in the next 2 hours. You could go into a bad habit, spiral down a whole cycle of revenge trading, and you could blow all that money you made in a matter of couple minutes. So there's no point in going around trying to say, "Hey, I made all this money." It's cool. Price then sells off the next day and looks stagnant. Doesn't look like it's range bound. It's really tiny. Many people might be anticipating this to be, retraced back down. That's another thing to look at as well. Retracement, right? Consolidation, expansion, retracement, another expansion leg. That's a good way to look at it as well. You would possibly be waiting for it. It may not ever come too. I want you to understand that too. And you may not even get that retracement that you're looking for. You may be waiting for that for months or even weeks. This could be left open. This whole range could still be left open in the near future. Yes, it probably most likely probably the next month or so, next 2 months from now. Yes, this might be filled back in later, but that's all according to your system. You got to have patience. So those traders that are waiting for that retracement, they got to have patience, right? Those traders that are waiting for some type of optimal trade entry, take this swing low, drag their fib all the way up here, cut the range in half, find a new premium and discount levels. They have to be patient too. They have to wait for price to turn back into a discount, get below 50%, get down to 60, 70.5, 79% OTE levels, and then go long. Got to be patient. Even then, so that model can still fail through. No one says that OTE is always going to be perfect every single time. I remember when I first learned ICT and I learned about optimal trade entry, I thought I was, I thought I was him. I thought I was that guy. Little did I know that you can't just apply OTE to just anything. You just can't. Oops. There we go. Down candles. Those are buying opportunities. If you're going to take that approach that I'm telling you about buying on the close and buying at the open of down candles, you need to be risking small because you're doing this on a daily time frame. Now, for those that are day traders, you're going to go in and you're going to be a little more specific about your entry points. You're going to be looking for price to drop below midnight opening price, London opening price. Let's just take a look at one of these days. Let's take a look at this Friday candle. This Friday. Let's go down to the 15-minute time frame. Turn the sessions. 30. Where's Friday at? Oh, there we go. Sorry. Wow. Look at that. We got a Friday. You got a Friday AMD pattern here. It's a little dragged out. New York does consolidate. You can see London close continuation pattern. Remember, London close has two characteristics, either reversal or continuation. And that's what you would normally see. So if you were looking to go long on this day going forward, after you got that higher swing low confirmed, and you're looking to go long any day, Where should you be going long? Some checkpoints, right? Some checkpoints. Below Asian Open. That's one. Do we have that here? Yes, we do. There you go. Price dropping below Asian Open. Some people may ask, oh, Deontay, but how many pips? I would say increments of 5 pips. So let's just break down this increment of how many 5 pips we got below this Asian low. I'll take the magnet off. So about 5 increments here. So let's say you go 5 pips, you would have a 30 pip stop loss, right? Or 20 pip stop loss. Let's say price drops down another 5 pips, you go long again. You would have to obviously reduce your risk because you don't want to be risking way more than you can actually hold on, depending on your leverage and margin. So let's say you go 0.5% at 5 pips below, right here. At this point, at that point here, you're going 0.5%. 0.5%, you have already placed in your stop loss. Okay, price drops down a little lower. Let's say you're still feeling that it's still going to go higher. It goes down another 5 pips. You risk another 0.5%. Now you're at a full percent loss here at this point, and you hold. Let's say your max loss that you can actually adhere is more than just 1%. Let's say you could risk 3%. Okay, so let's go down. If it drops another 5, okay, I'm going along again. All right, you're at a full percent and a half. Or again, now you're at 2%, and then you hold, and you can see our price runs back up. Another filter to where to buy below London Open, the session's opening price. Let it drop below the opening price. Let's mark out the opening price. Where is it? Right there. Notice the dead zone too, right? Buy side here, sell side. Notice how it takes out the sell side, trades all the way down here, runs all the way back up, and gets to that buy side 15-minute swing high. Just mark that out. Oh, where's my magnet at? Here we go. So this might be a good example for a London session model, right? Very simplistic idea. That's the buy side. We'll put a dollar sign over above it here. And then we have remove the Asian session low, since we're just talking about London. And then we got the sell side here. Is it that one? Who's lower? No, they're double bottom. They're both. So we're gonna. These are both the lowest lows within this session time period from midnight to 2 a.m. So we'll take that out. And actually, technically, it would be here. That would be the lowest low because the Asian session lunch. I call it the Asian session lunch because it happens after Asian. So the Asian session lunch is going to be from midnight to 2 a.m. And 2 a.m. is the lowest point of that time period here. You got that crossover because 2 a.m. is still included into London as well. And it's also included in the Asian session lunch. So you can see price takes out that 2 a.m. low right there between the Asian session lunch, takes out that low. So that's sell side. So that's that low. We don't got no data blocks too far. Trading View, you get me all the time. Pay all this money, and I can't look at all the data. That's ridiculous. Will it bring you back to that point though? No, it wouldn't. Of course you wouldn't, Trading View. Oh, Trading View killed me. Wow, man. Can't have anything. Trading View kill me. Pay all that money every month, every year, and you can't look at data at any point of time that you want. Ridiculous. It's capitalism at its finest. But if we're looking at this here, we can see how it purges down. I don't even think I could go down to the 5 minute. I think it's gonna. Oh, we can. All right, cool. And this a little that's a little better. At least we could see the 5 minute. Damn, you could give me the 5 minute, but you can't give me the 1 minute. That's ridiculous. You see price takes out that low at 2 a.m., right? It comes down and price runs all the way back up. So what do we have here? Price coming down real fast with a fair value gap to the downside. Once again, look at that. Fair value gap down, fair value gap up, balanced price range, balanced price range. We also have what? The Larry Williams smash day candle idea. I know there was somebody in the chat that was sending me a lot of charts, sending the chat a lot of charts asking me, is this a good example? Is this a good example? I can see they were practicing and they were doing a great job. This is a smash day candle because this candle closes below all these lows, even this one too, right? But since this one closes below the lows, this would be the most recent one that we have. That means what? If price gets back to this high here, we would look to buy. And we can see even with this smash day candle too, we also get that confluence of what? Balanced price range, fair value gap down, fair value gap to the upside. You can see even trades right back down into that balanced price range. Takes that Larry Williams entry technique here, buy here at the candle's high. If it returns back to that high after closing below all these lows here, it closes. Look at the close. It's outside that candle's low, this low, that low, oh, so many lows, several lows. Gets back to that high. That's where you look to go long. And Larry Williams was teaching this on the daily, so it was much more powerful. But as an entry technique for someone that's day trading, I think it could be really useful for spotting an idea like this, seeing the candle close outside, because this looks like what? This looks like selling pressure, right? Like I have a good friend, a good pal, and he's into stocks and stuff. He's really my good pal. I talk to him on a day-to-day basis, and not saying that he isn't intelligent at all, but he just isn't informed. It's just that I would hear him say, "Yo, D, yo, look at this. Yo, look at Apple. Yo, look at Microsoft. Yo, look at this. Look at the S&P. Yo, do you see the buying pressure? Do you see the selling pressure?" And at times I do correct them, of course. And I'm like, "Hey, it's not buying pressure. It's not selling pressure because that doesn't exist. That's not what's driving the market." But we can see this in the most. If I were to ask him that same question, he would tell me selling pressure. He would tell me that because that's what the retail common law knowledge would teach. That's selling pressure. You see all these black candles, all these red black candles going down. Oh, it has to be selling pressure. But then what happens to this? What happened to that selling pressure? I thought it was selling pressure. If it was truly selling pressure, why did price come back up into that range like that and then continue trending higher? Couldn't have been selling pressure. It's controlled. That pressure that you're seeing is methodical. This is all strategic. This drop all the way down here, the algorithm already knows by the time it opens at 2 a.m., odds are, some people believe this, some people don't, but I kind of do believe it. I'm on the verge of like, I don't know, maybe the algorithm isn't that intelligent, but maybe it is, right? In casting forward future data. But there's been talks about people saying that the algorithm already knows where it's not and where it wants to be. So by the time 2 a.m. opens, it knows where it needs to be by 5 a.m. It already priced it in and it knows how it's going to do it. So if it doesn't know that, then it can't be selling pressure because the market's just all manipulated. It's all fake. It's all fake. I want you guys to know that. It's all fake, though. It's a sad reality when you actually sit back and look at it. The end game is that the market is rigged. The market is literally rigged from pip to pip to pip. Doesn't matter. From open, high, low, and close, it is already rigged. And you just got to be able to know how to play in that sandbox as much as possible. Price trades down in that fair value gap. It's below 2 a.m.'s opening price. There we go. We got some more ideologies going on in here. London open. London. Can't spell. London open. We're below it. So what does that mean? We're in a discount. Buy low, sell high. Price comes all the way back up. And it gets to what? That buy side here. I want you to see that when it gets to that buy side, that 15-minute swing high that we marked off, look at how the candle closes on it. That first candle that hits it, look at how it closes on it. and then look at how the next candle opens on it. I want to double check to see what this price point is. So that's the price point. Let's see what this open is. I mean, this close. The close is literally the same. I want you guys to see that this candle here. Look at the top where there's the C here. Right here, see that's the close of the candle. Look at the close. Wow, right? It's rigged. It's so rigged. Because why did it stop on the dime right there? Why couldn't it have been a pip off? There are times where it is a pip off, but that's still strange enough. When it's a pip off too, a couple pips off, it's still very strange. But it's definitely strange when we see it close exactly on the same price point here. Why this level? Why? Now I don't know the answer to that. I would only say because it was the most recent buy side liquidity and it was purged. And then the market had to flip the orders, and mitigate those buy stop orders above the high. That's the only thing I would speculate and try to paint a story around. It might be bigger than that, but it's strange. And then look at the next candle too. Look at the open of this candle. Look at the O here. Look at the O. It's the same price point. You telling me these markets are not rigged? Come on, gotta wake up. It's sad to say, but I'm telling you, this is the truth of trading. Stocks, futures, commodities, cryptocurrency, it's all rigged. It is all rigged. It's unfortunate to say it, and it's sad to say it, but it's all rigged. But we got to play. If this is the lifestyle that you're going to take on as a trader, you better learn how to trade this market. There's no ifs, ands, or buts about it. You want to be a trader? There's going to be risk. 65% of us to 95% of us fail. I said that statistic last time. Let me see if I can find it. Who was it? Was it Forex.com? I think it was Forex.com. What was it? Oanda. I think it was Forex.com or Anda that had said it. I think it was Forex.com. Mm-mm-mm. Where did I find this thing at? It was showing the stats. Learn us courses. It was definitely Forex.com, I believe. Bear with me. Definitely don't remember where it was at. Was it about us? FAQs. It's probably FAQs. Terms and policies, I believe. I think it was terms and policies. I have no idea, man. Disclosures, was it disclosures and risk warning? The transaction data report. I think I found it. Ah, perfect. There we go. So there's people in the community as well that say it's a myth that 60 to 95% of traders are failing. It's actually true. And this is from one broker. This is from one broker. Imagine all the regulated brokers around the world, and even the unregulated brokers around the world too. A lot of people are not accounting for all the data that might not be actually accounted for. Let's read this together. Performance of non-discretionary retail forex customer accounts for the calendar quarter, and let's read it together. All this whole thing here, right? This whole highlighted area here. Let's zoom in. For the calendar quarter ending September 30th, 2023, there were 36,744 active non-discretionary trading accounts, of which 28.8% were profitable and 71.2% were unprofitable. That's a huge margin, right? That's a huge margin. 71.2% were unprofitable. For the calendar quarter ending June 30th, 2023, there were 37,831 active non-discretionary trading accounts, of which 28.38% were profitable and 71.62% were unprofitable. For quarter ending March 31st, 2023, there were 37,082 accounts active, non-discretionary trading accounts, of which 31.2% were profitable, and 68.8 were unprofitable. For the calendar quarter ending December 31st, 2022, there were 35,714 active non-discretionary trading accounts, which 31.6% were profitable and 68.4% were unprofitable. A lot of people are falling inside of that 68%, right? So that was the lowest percentage that they called out in 2022 in December, at least for that quarter. A lot of people are still following falling inside that range. And then beyond that, we can see going into 2023, it was bumped up to 71%. So this this field already is difficult. It's already a difficult field. And if you signing up to trade, man, you got to be informed. You got to be informed. Your sources need to be legit. The models that you're using needs to be back tested. The pairs that you're using needs to be suited for the model. The day of week that you're trading needs to have the volume behind it. The month that you're trading in has to be primed to move. It's so crucial. And I know it sounds like a lot because it is a lot. And I'm just bringing it to the forefront in the most simplest ways and the things that I think if I had to go back 6 years, right? If I had to go back to where it all started, right? When I was in my college dorm and I was learning how to trade and I was skipping out on chasing girls and drinking and smoking and etc. Right? And I stuck in my dorm and I kept learning how to trade day in day out. I lost live funds, of course. Everybody thinks it's easy at first. Oh my gosh, this thing is like an ATM. It prints money. All I got to do is click buy. Oh my gosh, look, it's up $2. Oh, it's up $200. And of course, when you start getting, especially when you're introduced to trading that way, um, especially when you're introduced and you're winning at first, it's really a bad start because you're very like Supermanish, You're like you can take over the world, nothing can stop me. But those traders that take a big loss at first, I think they get the wake up call much earlier and they get to adjusting sooner than later. Those traders that get into trading and they find big success, even though it's like most likely random and they don't really have a model, those traders tend to really be humbled when they take their first big loss, of live funds, And I'm talking about like $10,000, $20,000, $40,000. I'm talking about like a semester's worth of money, Then people are going to start to wake up and say, then that trader's going to wake up and say, oh, dang, I should have like really took my time and really understood this and not just been guessing, and getting lucky. I don't try to get lucky. I want to be right, you know? And I want to speculate as best as I can. And that's what I think you guys should do as well. The reason I put out those videos in 2022 and 2023, so if you were to go over to my YouTube channel, hold up. Like if you go YouTube, all right? As soon as you come on my page, I already tell you how I feel. I tell you how I feel. Indicators are detrimental to traders' development, period. That's it. There's nothing else that needs to be said. If you go to the playlist, you go down to the playlist and you look at this. Where's my first playlist? There it is. Don't play it. Don't you play it. Okay, cool. This is 2022 lessons. Now, this is everything that I thought that was very crucial to trading. If I had to go back and tell myself what to trade and what to focus on when I was in the dorms first trading, it would be all these lessons. All these lessons, straight to the point. Everything here. I would learn every single thing here. Starting off with speculators, midnight opening price, the four phases of the market, the Asian session model. I would learn that right away. How to high probability scalp on the daily time frame, how to use seasonal tendencies, if to look back data ranges, when to avoid trading London, learning the Sunday opening price, and understanding the full Forex day. And I think I have it up here. I think I brought it up here somewhere. If the true day, there we go. So that's a full Forex trading day. I wish I had someone to draw a diagram like this for me when I first started trading. And they would tell me, yo, you shouldn't be trading between 5 a.m. and 7 a.m. Dead zone. You can't see it, but it says lunch. says lunch here. And there's also another one here. I didn't mark it off when I made it, but there's the Asian session lunch, 12 a.m. to 2 a.m. But there should be no trading occurring here. 5 a.m. to 7 a.m. 12 p.m. to 8 p.m. No trading. Now, this is answering someone's question in the chat. Someone said, "Why should we not be trading in that dead zone?" Why? Because of exactly what you see in the chart. What do you see happening here? A whole lot of nothing. What is it doing? Gyrating back and forth, back and forth, back and forth, back and forth. And you can even see the candles are small. The largest candle for this day, where does it form? At the end of the New York session or the start of the London close session. 10 a.m. is the largest candle for the entire IPDA day range here. But as soon as we get into this session here, look how tiny the candles get. You can tell there's a volume within this session because look at how large the candle is. Very large. And if I had to go back, this would be something that would be stapled on my desk in front of me while I was trading. Oh, D, what time is it? Oh, it's 5 to 7 a.m. All right. You need to go to bed or you need to focus on something else. Get ready to go to class. Instead of going to class and trying to trade in a dead zone, you know, midday, I'm in class and I'm trying to trade here and make money. I'm not making money there. I'm actually losing money. I'm just like, why is the market so against me? It doesn't want to trend, right? I'm inside some type of course, whether it's whatever class I'm in, and I'm trying to trade within this time period, or I'm at work, and I'm trying to trade during this time period. And it is just not it's just not happening. It's just not happening. Unless you've already, right, got a trade set up in London, in New York, and you're holding for higher prices and you got a trailing stop, there are going to be times where New York lunch will trend and you will have a big grin on your face. But there are most times than not where the New York lunch session consolidates back and forth over and over and over again. So let's take a look at that. So let me just clear this all off. Take this off. I'm going to turn this on. And we're going to mainly look at. I'm going to take this. I'm going to take. No. I'm going to leave this one on. And this should be. Nope. That's not it. That is not the one I'm looking for. Okay. Which one is it that's marking that out? I'll have it as set as my Asian one. Okay. All right. So I'm going to take a look back at all these gray shaded areas. What do they all have in common? This question was in a YouTube comment on one of the Asian session models episodes and wanted me to answer, why do we not trade between 12 p.m. to 8 p.m.? Why? Because of this exact example. Come on. Isn't it not obvious that the market is programmed to do things at certain times a day? Yes, we do see a little move like that, but look at the rest of the day for those couple of hours. Nothing. Yes, it trends down. Like I said, you'll have those moments in time when you get into a trade setup in London or New York. You happen to be on the right side of this market going down. This will put a big grin on your face because if you have a trailing stop and you didn't get stopped out, this will continue to follow your profits, right? Price is still trending in the higher time frame trend. But because I know this session has the characteristic of consolidating, I'm going to completely avoid it because I just don't want to flip the coin and end up in a condition like this. Yes, you get that large drop down, but look at how it starts to bunch up again right before Asian, right? Right before 8 p.m. right here, 20, 2000, right there. How many more examples should I have to show? Because I shouldn't have to go through a lot of examples, but it's pretty obvious that the market consolidates here a lot, a lot of the more times. And this is just one of the dead zones that I'm showing because there's three more other dead zones. That's that one dead zone that I'm showing here. That's where is it at? Right here. There's two more. London. That's another dead zone here. 5 to 7, dead zone, consolidates. Another characteristic for the London lunch is reversal. I think I have it written down here. I'll have retracement. Retracement. Right? You get a deep retracement or consolidation. So I don't like to trade that time period, even though I've already set my eyes out for forget about London because I'm going to bed. I live in New York. Everybody in this part of the world is sleeping. In my life schedule, I can't trade London. There are times where I do stay up and I sacrifice sleep just to show examples or get examples to show you guys that it's possible to use simple ideas to trade London. Other times, if I'm not doing that and not feeling too, energized to stay up or encouraged to stay up or whatever the case may be, I'm skipping London. I'm definitely skipping London lunch. I will possibly trade New York. If not, if I have duties to do throughout the day, where I have to take care of business, I have to help my brother, I have to help a friend, I got to do stuff with the land, the farm, and stuff like that. I'm not trading all this time here. I'm not trading. Not trading. Not trading. Not trading. Not trading. Not trading. And then boom, Asian session. Then I'm trading. Then I'm gonna look to trade because I'm free then. But I avoid all this. Let's go back. Why do we avoid that time period? Because it normally gives us a phase of consolidation. That's the simplest answer I can tell you. There's nothing more to it. It's not no fancy algorithmic pattern or something that I know that's super secretive. No, with common sense, I could just look at it and see, oh, it consolidates. So Deontay better not be trading here, right? Deontay should not be trading here. I know some people think my name is Dante. It's so funny. It's Deontay. D apostrophe ONTE. That's how my parents spelled my name. Um, but yeah, consolidation here. Just keep looking. We're gonna keep going back throughout all the days. Look at all the days. Look at all the days. It's dead. It's dead. It's dead. That's why I call it the dead zone. It's dead. It's not doing nothing. It's dead. It's like a fish out of the water, just flopping back and forth, back and forth, back and forth, back and forth, back and forth. It's not doing nothing. Back and forth, back and forth, back and forth. Very tight. And I like that. I really do like when the market starts in a consolidation before the next live session. What do I mean by live session? I'm referring to ICT's kill zones, London, New York, and Asian, or even London close. I definitely don't trade London close. I don't prefer it. Um, but I like when it consolidates right before Asian session because of what do we have on our hands? We have areas of equal highs and equal lows. We can easily purge one side and revert to the other side. Let's just take a look at this example here. I don't know what happens on this day. This is Tuesday, right? This is a Tuesday Asian session model. Look at it, right? Here is midnight. So price comes down. Are these double bottoms? These are double bottoms, so it's not a swing low. This is a swing low. This is a swing low. So cool. So we got two swing lows here. Hopefully, it's not going to allow me to jump down on the 1 minute. But let's jump down to the 5 minute. We're below Asian session low. A little parched. I'm gonna have to excuse myself to get some water soon. But we're below the Asian session low. Price drops down, takes out those 15-minute sell side liquidity that forms inside New York lunch dead zone period, 12 to 8 p.m. This is the Asian session model, and this is with EU. So they're just showing in reference, right? Price comes down, takes out sell side liquidity. What do we have left? We have buy side, right? Where's buy side? We'll go back to the 15-minute so we get the accurate ones. Got this one, this one, this one. You got this one, and then you got the highest high of the session. See that one at 12 p.m. The last one that I just marked off. It's not a swing high, but it's the highest high. It's the highest high of the session at 12. So that's why I mark it off. Said I mentioned that before in the Asian Session Library series. You can't skip. That's the reason why I say like people struggle with ICTs because they skip videos. They skip straight to like month 6 or skip straight to like market maker models. So I'm like, bro, go back to month 1 and go all the way through to month 12. You skipping just leaves gaps. It's the same way where some people skip, like they would skip my video. They'll skip a few videos, and then when I tell them about this, they're like, "Wait, I've never seen you talk about this before." I'm like, "I have. If you watch the video, you know that I've definitely spoken about it before. Nothing that I speak about is relatively new. Nothing I speak about is new. It's been the same for the last 3 years. Price is coming back up. Let me go back on the 5 minute. You see how this candle is a smash day candle? Why? Because it closes below several lows. Its close is below lows. Price returns back to its high. So that's the potential buy opportunity here. So if you were looking at it like that, you would buy there and you would hold. And you can see how that would be profitable. Where would you put your stop loss? Just at the low. Because Larry Williams did not give a specific stop loss. So I took it upon myself to make it as simple as possible. I would buy at the high, put the stop loss at the low of that candle. Look for a 1-to-1. This is already more than a 1-to-1 from where it's at. And that would be the trade idea, right? Buying below the Asian session open. I can't go down to the 1 minute to see if there was a 1 minute fair value gap here, the entry that I like, but this would settle as a good example just to show you that you don't have to pick one entry technique. There's multiple ways to get into the market. And just to play it through, it seems like price does trade a little lower, but look at how this buy side liquidity is still residing here, right? It tagged into one here, tagged into just almost tagged into that one. I'm not sure if it gets back up there. If it leaves it open, just want to see if price does return there. And jump on the hourly. And it does. Look at that. Right? It does get back up here at some point in time because it's buy side liquidity. It's clean highs. These highs are too clean. The market and sooner or later it will get there. It may not be the next day. It may not be the following day. It may be next week from now. Maybe 2 weeks from now it gets back up there. And it does. It gets right back up into those same levels that we marked off in the dead zone. So these are the small things I've been observing as I've been trading. And I believe the dead zone, just like Asian session, they tend to have a big draw on price, especially if they're left open. See how it hits all those levels there? And then it sells right off. Interesting, right? Very interesting. But just to continue, just so we can like finalize it and cement it into our heads. No trading is permitted between 12 p.m. and 8 p.m. What you are looking at is 12 p.m. to 8 p.m. and that's highlighted. This probably is like a Friday going into a Sunday. Yeah. Look at it. Look at all the consolidations. I cannot be cherry picking because this is hindsight data, but it's something that it's already printed and I can't manipulate the candles. If it was up to me, I would manipulate the candles in my favor to always win because that's what the market makers do, right? You manipulate the price action so that it always favors you. You need to think just like them. You're thinking too small. It's bigger than what you think it is. That's about it. Look at that tight. Look at that tight range. Tight, 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 tight. And then boom, Asian hits off. And then it starts to move. Oh, that's not even. Well, that's going into the weekend. But that's Mondays. That's Sunday's Asian session, technically. And I don't trade Sundays. But I do want you to know I have found Asian session models that set up with um Sunday. So taking Friday, right? Taking Friday 12 and then taking Sunday because you have to take both days because it doesn't make a full New York lunch session. So if you were taking Friday, it would be here, 12, and then we'll go into Sunday here. So you're technically taking Friday and a portion of Sunday to trade Sunday's Asian session. There are times where I've witnessed that it did produce the same model and the same entry, but I don't think it's a something worth your while to look at. It could be, but I personally don't think it is. But don't trade during these time periods at all. All right. So I'm just gonna grab some water. And when I get back, I'm gonna check the chat to see if there's any questions. If you have any questions, please type them in now. I'm gonna go downstairs to go grab some water. I'm a little parched. Thank you. All right, cool. I'm back. Thank you guys for your patience. I appreciate it. Thank you for all coming out and listening tonight. All right, let me just go back. Why not 7 a.m.? Let me go back up. All right, cool. Why 7 a.m. and not 8:30? I'm not sure. Um, about that question. I'm not sure if you're talking about like Asian session open, but Asian session open for me would be at 8 o'clock. I know there's some people that start. There's a lot of confusion. There's some people would say Asian session open starts at 7 a.m. I mean, sorry, 7 p.m. 7 a.m. and not 8:30. I'm not sure what you guys are talking about. 8:30 is usually facts. Okay, yeah, I see what you're talking about there. Yeah. Yep. It all depends on the asset class that you're looking at. So if you're looking at indices, yes, 8:30. If you're looking at Forex, it's going to be 7 a.m. Good night. Just wanted to know if S&D can work with the formula. What is S&D? That acronym is just not coming to mind. I don't know why I can't get that acronym in my head. S&D supply. Good night. Just want to know. Mm, you can say that. Like, there's probably overlap for sure with supply and demand. But like I said, with the supply and demand thing, it's subjective. How you're drawing out those supply zones, the demand zones depends on the operator. The operator tends to draw supply zones and demand zones differently. So there might be overlap, but I personally don't do supply and demand. Do I trade futures? No, I do not, but I do track them. I track the futures. I have a whole column of the futures right here. There you go. Yen, euro, pound, CAD, Swiss. It's very all similar to FX as well. Nothing different. If I had to trade them, I would be day trading them on the daily time frame because I'm a swing trader, so I'm a little biased. I know some people may not prefer that, but I'm a swing trader at heart. I'm a swing trader. I love swing trading. I try my best to not be a slave to the screen or the slave to the charts. I want to be away for other things. Let me get back in the chat just to see what you guys are saying. Can you please give me clear about the gaps, please? So it's future, so you're definitely gonna get gaps. That's the way it's gonna work. In futures, you're gonna get a lot more gaps than you will in FX. And the way it opens and has a lot of breaks, you're gonna get a lot more gaps. Let me take the sessions off here. Probably referring to the gaps on the lower time frame. I'm assuming so. Give me a certain futures that you're talking about, and we'll look at it if you have an example, and I'll look right at it. Mm, 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 mm. Bullish. Of course it's bullish. If you don't know, stocks are bullish right now. Phew, all-time highs made by the S&P 500 today too. All-time records. Um, yeah, you got those gaps, of course. You know, you would use them similar to all the PDA rays that ICT would have taught you as well. But all in all, I do think it's because of the break session. So you're gonna get those gaps here. If you're talking about, let's see, because I don't trade the minis here. Not even often. Hardly look at this. I just look at the S&P 500 and compare it to dollar. But if I had to look at this, it's the same. Nothing changes unless you're talking about it on the lower time frame. If you're talking about it on lower time frame, that's a different question, and that would be a question I personally wouldn't be comfortable answering because I don't trade this. I trade FX. I trade FX. But it wouldn't change. The whole idea, all the markets, I want you to understand all the markets are the same. It's just the timing that's a little different. You'd have to do your due diligence because I'm not going to sit here and pretend like I know how to trade the mini futures on the lower time frames with the kill zones. It's still probably the similar fashion as well because we know all the markets are rigged and all the markets are primed to some type of algorithmic code. So it's going to have to print the candles in a certain nature to get to where it needs to go. The way it forms those bullish trends, the way it forms those bearish trends, it's the same thing. Higher swing high, higher swing low. After down days in a bullish trend, you should be buying. Look at where hindsight data, of course, from October to now. Look at every down day we had for the minis. Now, if you were to just now it's hindsight, but if you were to buy after every single down day, you would be profitable. Right or wrong? Right. Because we can mark off every down day here. And we know that the stock market has been on a run, has been on a run. If you don't know, now you know. The stock market has been rallying, and this might be a good leadway into my speculations in the markets. So right now, I believe something isn't right. Something has to happen. All-time highs just got hit. Had a discussion with that same friend of mine's that likes to trade stocks, and man, he's anticipating like a reversal happening. You know, it must come down. I'm like, that's true. That's one scenario that could unfold. You know, and the other scenario that I could see unfolding would be price still rallying higher as well and continue to reach higher levels. You know, continue to keep making new daily high records as it keeps trading higher, higher, and higher and higher. Because right now, yeah, we just made all time highs. You just clear this out so you guys can see this. Get that off. Yeah, we just made all time highs. So history has been made again, and same premise as again on the yearly chart, monthly on the yearly chart. Look at how after this one down year, if you was a buyer after 2022, you would be in profit the entire year. Wow, right? Now that's something most people wouldn't want to hold for, but it doesn't look too sexy in the eyes of, boasting on TradingView and boasting in Telegram. It doesn't look sexy, but that's not what we do it for. We do it to pay our bills, to feed our children, to feed our wives, our husbands, whatever the case may be. We do that in order to provide and shelter. Period. But after this down year, we had a quick recovery, right? Stimulus was injected into the market, inflation was going up. But what I meant to say was interest rates were going up. Interest rates going up, so you got yields going up. So it's a very interesting thing. Now, my speculation is currently right now with the DXY, stocks and DXYs normally have a inverse correlation. So let me just jump right into the S&P because this is what I prefer to look at. So S&P 500, you got the top 500 companies in the United States. Obviously, some of the big top 5 or top 10 is like Apple, Microsoft, Amazon. I don't know if Tesla's still up there. Tesla potentially iffy. Who else we got there? Alphabet, Google, Alphabet, class B and A, I believe. I'm not sure if I have it up here. Who I have up here? I have class A up here. Class B is probably the same thing. Meta. So you got some big Nvidia, right? All-time highs right now. So if you've invested in stocks within the last 10 years and you've been holding, you're definitely beating inflation right now. You have great rate of return. And I always tell people that are younger than me, of course, start early. I'm 25. I'm turning 26 this year in October. I always try to tell my younger brother to invest, whatever little dollar you get from your paycheck or whatever little dollar you get from whatever you do for your means of income, save some and invest it. Save some and invest it. Save some and investment. Yes, there are going to be times where the market goes into, recession like feelings or depression, the market crashes, but it's all rigged. The economies want these stock markets to continue to go higher. There's no reason why they don't want it to go lower. They want it to go higher. So when we do get a big crash, we get a crash of like 10%, 20%, you should be allocating some funds. And like I said, I ain't telling you what to do. This is just general advice. Please, disclaimer, check in with whoever manages your funds or manages your money in general. Ask them how to invest your money. Don't take my word for it. That's just a disclaimer. I just don't want nobody coming here and trying to sue me. But as we can see with hindsight, if you haven't been investing in the last 20 years, you've been missing out on some free money, basically. Um, but dollar going up with DXY with S&P 500, such a funny feeling for me because they should not be doing that. So we're going to daily for the beginning of the year so far, and let's just throw S&P on the right side. S&P 500, S&P X, S&P 500. Go down to the daily. Oh my gosh, what a move. And notice this is not like notice how it's gappy. It's gappy. Look at the way it moves. It's gappy because that's the nature of this asset class. It's very gappy. Very gappy. Look at the gaps. Very gappy. Even if you were to look at SPY, right? The futures, I mean the ETF of the S&P, right? The ETF, a lot cheaper to get in, of course. It's $482 versus this $4,839. Definitely not. Most people can't afford to buy a full share of this. A full share will cost you $4,000 and change. Let's just round up 5 grand to buy one full share. And then it's crazy, right? Um, but looking at dollar, zoom in closer. 2024 here. So just some speculation. Like I said, I'm not gonna always be right, but these are just subtle things you want to look at. Dollar and the S&P have both been bullish from the beginning of the year. That is a cracking correlation. They should not be moving in the same direction. They need to be moving in opposite directions. So when dollar goes up, stocks generally go down, and gold as well goes down. And we're seeing complete opposite. It's completely not even respecting its correlation right now. So I believe something is not right. Something is up. One out of the two of these things is currently lying to us. For which one it is, I don't know yet. I haven't arrived at that conclusion yet because it's not something I kind of might have. I think the dollar might be lying, but and I'll tell you why shortly. But we don't want to see them both going up in the same nature. They need to be moving in opposite prices. So if you zoom out, look at December, look at November and December. Look at November, December for DXY2. Opposite. One's going up and one's going down. What's going on in recent time? They're both going up. So one of them are lying. One of them is clearly lying to us. And I'm favoring dollar. I'm favoring dollar, which would mean that means US oil might sell off too, which I'll be wrong in that speculating of oil going higher. But the reason I'm speculating dollar might be lying currently is because of the bond yields and because the Feds are going to cut rates. If they cut rates, yields are going to go down. Investors are going to be less interested in this asset class of holding dollars. And oh wow. See, I haven't checked it in a while. So it looks like the bond yields made a good recovery because it was selling off. You can see here, dollar was going up. Look at the cruiser where it was when it was selling off. It was selling off. Look on the left side. Look how it was dropping, but dollar still holding tight and going up. And at that point, this is when I had checked it. I was like, oh, bond yields are selling off. I'm like, interesting. Dollar's still going up. So something's not right. So that's the 2 year. Looks like it made a great recovery. Balanced price range. Got a fair value gap here, fair value gap here, fair value gap here, fair value gap here. So balanced price, it looks like it probably trapped sellers. And now it's probably looking to go higher. That's very interesting to see. Go back down here. The 5 year as well did the same thing. It was selling off and now it rebounded. 10 year didn't sell off as hard as the 2 and 5 year. It held its ground, created higher swing low, and continued trading higher. The 30 year standing very strong. So it looks like things definitely align as of right now, but I still think something's wrong in general. I think that one of the two is lying. It could be dollar. It could be the it could be the stock market. You look at crude oil right now. I'm still speculating it to go higher. Looks like it's building a lot of open float, sell side liquidity, and it could probably just boom, sell off really hard. If demand is low and there's a heavy supply of oil, and we don't need as much oil as we want throughout the economies, then the price is just going to drop. They're going to lower the price because it's a surplus. Too much of one good just lowers the value of it. The scarcity of the good increases the value of it. So if we had a scarcity of the oil prices of cargo ships, or the delivery of oil, or the drilling of oil and drill sites going up or down, then we could probably see oil prices go higher. So it's a little more difficult when trading oil, but I'm glad that I took on the challenge to do a daily bias tracking on US oil, because it clearly challenges you, because it's more than just a price action at times. Because you can see recently there was a lot of, let's go back. Where was it? Mm-mm-mm. That was 11 hours ago. The attacks on the cargo ships by the Saudis, during in the Red Sea, it was causing a lot of disruptions, and a lot of people were speculating that it wasn't going to disrupt them too much, and it shouldn't impact the prices of oil. That's what professionals are saying. And I like to go opposite some of these professionals, because even though they're professionals and they hold this title, some of them, in my opinion, have poor speculation. And I think I speculate better than them, and I'm not on TV talking about forex. I'm not on TV talking about stocks, so they get it wrong too. Everybody's banking on oil to drop. It's such an interesting thing to see how everybody in mass media is expecting oil to drop, but here I am sitting in my house thinking no, oil is going to rally in price instead. And we'll see how that plays out. But that's my speculation currently on dollar. If I had to compare this to euro, because I know there's some people out here that want to look at euro. Reset for me. Thank you. It's been going down since the beginning of the year. So it's following the code, right? It's been selling off. We got our very first large fair value gap on the daily to the downside. So we suspect lower swing high to possibly form inside there and continue selling off. And same thing here. We got dollar that created a fair value gap to the upside, create a lower swing high in here. I mean higher swing low in here, and then possibly go higher as well. If we look at who we got underneath that, we got New Zealand dollar. I already called. I knew New Zealand dollar was going to sell off earlier in the chat. You saw me talk about New Zealand dollar and how it was possible to find a sell setup after this up candle here, or this one here. And ever since then, we started selling off larger candles. So you see how it's been accumulating for a while, and then it finally dropped off for that sell. It gave a lot of people a run for their money. A lot of people were struggling with like all the dollar crosses, because a lot of them were consolidating. Even GU still is still fighting pretty strong, right? It's still ranging, right? So you got to sit on your hands sometimes. Like this, if I was tracking GU, I would tell you, hey, I'm still sitting on my hands, or I would slowly follow the trend formula and wait for that confirmation. Because recently, let's see, yeah, recently we broke a swing low and we got a fair value gap to the downside. So I want to see if this swing high here on the daily If we don't run this daily swing high, then we're most likely going to continue going lower. We want to get a lower swing high, protect that one too. So we don't raid this one and we don't raid this one and we continue going lower. Then we take out this, we raid this, we raid the swing low, we raid that. All right, that was a poor check mark. All right, whatever. We raid that swing low instead. So that's what I would speculate. But it's still range bound. It's still, like I said, it's still the first month of the year. You got 11 more months to trade. January is a month that a lot of ICT traders have been trained to not trade, but here I am still trading it, especially during Asian session model, and proving to you that you can still trade January. It's possible. And you can still trade December as well. It's possible. It just all depends on the pair that you're trading, the asset class, and the model that you're using during that month. As you can see, January so far, go, what is it, Asian session model. So far, it's doing so well for itself, for January 2024. It's doing great. So the last one gave us 20 pips before hitting stop loss. Any of the ones that you see have a full number next to it, that means that was the max amount of gains it got before it turned around and hit the stop loss price. If it has this asterisk still, that means it's still an open float or open unrealized gains. So it's way beyond 40 pips, of course, because it checked all the way up there. And until the end of the month, we'll call it quits and then calculate the unrealized gains. But if it got up to 40, I'm going to count it as 40 and calculate it just like that. And then we're going to calculate the other one with the unrealized gains on the side just to see what it would have been if you would have been able to hold without moving your stop loss and what that would look like. And also to notice as well, like you'll start noticing a pattern. Certain days were a lot better than others. So you start to see these things as you track data, you start to see patterns. Tuesday, look at that. Tuesday ran all the way up 40 pips max. Let's see, another day, Thursday, nice 20, 25 pips. This should be checked into. I wrote 10, so it has to be that. 25 pips. This Monday, for some reason, this Monday just stands out a lot more than normal. Unrealized gains hit 40 pips. That was very interesting. Tuesday, we hit stop loss. And stop loss is only a 15 pip loss or whatever you're risking, whether that's 1%, 2%. Odds are it's 1% for me. Here, we got 20 pips on a Wednesday. A Thursday, look at this. Maxed out. It pretty much maxed out 40 pips. And then unrealized gains, max was 48 pips before hitting stop loss. Go down. Tuesday, stop loss. Hey, couldn't win that one. Wednesday, only 20. And then here, that last Thursday, only 20 as well. So we can see certain days definitely are more prime to run a lot further than others. And I think it's probably a lot more to than what I am just assuming based on just a day a week. Has to be something with the daily time frame, the weekly and the monthly, and the way it's lining up with daily bias for allowing it to run this hard in that direction. So just to let you guys know, I am tracking that and I'm trying to be consistent as much and be a great role model to the model. You can't just preach something and you're not actually preaching it and preaching it yourself and practicing it yourself. So just want to be consistent to show you that you can do it with little results. And yeah, that's pretty much it on the speculation. If you have any other questions, I think we're gonna call tonight a wrap. I've been yapping so much, I'm dehydrated and parched. If you do have any questions, just please let me know. Can you clear about gaps? Can you give a bit more clear about the gaps, please? About the formula when spotting the gaps, is it valid if the second candle is printed below the gap? Now, Larry Williams actually talks about this in his book about gaps. Um, if you read the book, if you go through his book, we have the PDF in the Telegram channel. Take your time and read through the book. I read through the book like 4 times. Every time I read the book, I find something new. He speaks about gaps and he talks about gap models. I know ICT has a gap model too, but if you read the book, he has some very interesting models and very specific too. So I would definitely look into reading his book if you get the chance. How do you call the high and low of the week? I don't call the high and low of the week. I'm not that person. I ain't gonna be that person to tell you that. Um, it's a difficult thing to do, I would assume, but most people would use standard deviations. They would use the Asian session range, use the central bank dealers range. They'll use the flout range. Those are things I personally don't use in my trading plan because it just makes things a lot more complicated than I believe it to be. And yeah, that's my answer to that question. I'm not looking to call the high or low of the week. I'm just trying to take a portion out of the pie during that week. Me trying to call the high and the low of the week is, I guess, me trying to be the pinnacle of my trading, and I don't think I'm there yet personally, and I don't think I wanna be there because it is something that desires a lot more attentiveness and desires a lot more time with me sitting here behind the chart and staring at it. I'm just trying to sit at this chart for a couple hours a day. Max that I sit in front of my chart. Besides, like, if I wasn't educating and if I wasn't doing the Telegram channel, if I wasn't doing YouTube, the max amount of time that I would spend in front of my chart would probably be 5 hours a day. That's it. Or maybe even less, you know? Besides like, if I had to cut out Asian session model, I would probably spend less than, like, an hour a day just doing my technical analysis, fundamental, and breaking into macros, and I'm done for the day. Rinse, repeat, gone, in and out. Most people spend, like, 9 hours, 10 hours staring at the chart. It can be very overwhelming, in my personal point of view, especially if you got kids or you got a girlfriend, you got a wife, like, bro, they need attention too. No problem. Well, thank you guys for coming out again tonight. Like I said, we try to keep things simple. I don't like to overanalyze the market. I don't like to over speculate. We could speculate this market in 100 different ways, you know, and different variations. And gold's gonna do this, and oil's gonna do this, and dollar's gonna do this, and G's gonna. We could speculate that all day. We could have an open discussion, and we would honestly get nowhere. We would get nowhere because everybody would have different opinions. Speculate it, state it, put it in the chat, post your chart, stand behind it, stand on business, and just move with it. The chart will tell you if you're right or wrong, and that's it. And if you're wrong, it's still okay. It's a learning moment, you know? It's a learning moment. Go back and realize, dang, why did my speculation fail? I thought it was going to go up, but instead it went down. What can I do to reverse engineer that to see how I could have called the down move instead of the up move? What was the other lens or perspective that I should have been looking at? That's what I like to look at all the time. When you guys send me the charts, I'm happy. I love when people send me charts. People don't send me enough charts, honestly. It's okay though. But when I see charts, I actually sit there and I look at it and I read it and I'm like, okay, this is what they think. Great. And I look at my chart. I'm like, okay, I can see how they arrived to that speculation. That's a great idea. Or that's a great way that they utilize this breaker or this fair value gap, or they utilize this swing high and this swing low, or they utilize something on the lower time frame. And you don't see that much from me personally. I know people ask me, do you use the 4 hour? Do you use the 1 hour? Do you use the 30 minute? I really don't, to be honest with you guys. I just don't. I do use the 4 hour for the smash day model at times, or even the 15-minute for the smash day candle model for Larry Williams. But most times I'm not doing the whole jump on the weekly, jump down on the daily, jump down on the 4 hour, jump down on the 1 hour, jump down to 15. And I'm not doing that whole nine. I'm really just going daily, hourly, 15-minute, 1 minute, done. And that's really it. I'm not doing the whole nine. Good question. What's a win rate? What's What's my you probably meant to say what's my win rate? My win rate is about 75%, 75 to 78%, if that's what you're asking. Dang, it keeps moving. Why does it keep moving? From your teachings, you said a condition to avoid London session is when the Asian session range is less than 40 pips. No. Correction. So when the Asian session range is less than 20 pips, when the Asian session range is less than 20 pips, meaning it's too small, right? It's really tight. It's smaller than normal. You should look to try and avoid London the next day, opt to trade New York. You're probably going to get a very funny manipulative stage for London if the Asian session is not in that nice primed levels, and those levels are going to be between 20 pips to 40 pips. Now, some people have different measurements, but I like to use those. It needs to be minimally larger than 20 and less than 40. It needs to be within that range. I want to see the agent session hold that tight range right there. Then I think London will perform a lot better than it would if it was way larger than 40. So let's say you get an agent session range that is larger than 40 pips. It's overextended already, right? It might be already exceeding the 3-day average daily draw, you know? You probably already exceeded the pip range for that already during that one Asian session. If it's beyond 50, 60, 80 pips in one Asian session, then London may not be suitable for trading because what is the Asian session in characteristic? Let's just look at the chart real quick. It's a phase of consolidation. We would like for it to consolidate. Regardless of the Asian session model, in its true nature, it does consolidate. So if we were to look at let's just look at DXY just for an example. If we're looking at the Asian session model, I mean the Asian session, it's consolidating. We want the market to start in consolidation because what ICT has been teaching a lot of traders with the four phases, right? IPDA, right? The intermarket delivery to price, right? If this algorithm is programmed for those four stages, right? Consolidation, expansion, retracement, reversal, and by his, I guess, methodology or his ideology, all markets start in a consolidation. And I see why that is really ideal to start there first. You want to wait for consolidation, then jump into the market because you're able to see what liquidity pools you have available to yourself. If you get into the market when the market is in an expansion phase, it's a lot more difficult to sit here and say, okay, what's going on here? It's easier to start reading the market from this as your basis because you get to see the gyrations out of it. Gyrate out, gyrate above it, and then continue higher. There you go. Right? Consolidation, gyrate up, and then get right back down below it again. So it's easier to see that it's easier to trade when the markets start in consolidation. And I answered this the last Forex Fridays. When is it ideal to trade the New York session as well? When you see the London lunch in consolidation. When you get a time period like this, moving sideways, right? The price action is consolidating. It is in a consolidation phase again. What is going to happen out of a consolidation? Expansion. Get out of there. Very nice New York session. So, just a general rule of thumb, you want to be trading, leaving that consolidation. You want to be trading when the price is going to get out of that tight range and start printing large candles again because the candles are small here. And look how large New York starts printing these large candles. It's a time injected market. They start injecting the volume at a certain time. Now, at times, the market volume is injected way earlier than 7 a.m. sometimes, and you'll see that the London lunch session is already trending up, and then it gets into New York, and then it literally doesn't trend. Let's find an example like that. If I could find one, a very trendy one. Like even this is very trendy. We get a nice reversal still. Price takes out sell side liquidity, runs all at 832. This is the 830 candle. That magic number, 830, boom, runs all the way up. Large candle, straight up, takes out the buy side. So it takes out sell side here, runs back to the buy side right there. Now, if you were to look at let's go to GU and then look at an actual Asian session range. Midnight, is that lower? Yeah, so we're gonna take it to midnight. So this doesn't make the cutoff, right? It's less than 20. So what would I tell traders? Avoid trading London. Look at what London does. Sloppy. Consolidates, 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 sells off finally. Carnage. Most traders are what? Psychologically messed up at this point. They're like the market's against me because it keeps ranging. Even by 3 a.m. too. 3 a.m. should normally be the turning point, right? That's the heart of London session. It doesn't even do anything. 3 a.m. comes, good sell off. It doesn't continue to trend lower either. It just comes right back up, sells down, trades right back up, finally sells down. Look at how that London session is not moving at all. Think about that. This is a great example. This is one example. And ICT has a video on other filters to when to avoid the London session. I just kept it very short and concise because I felt like this one was way more important than the other filters. The Asian session is what helps you trade the London session. And that also inquires to this as well, the New York session. So they all are helping each other to trade. The way this forms is going to normally tell you how this is going to trade. The way this form is normally going to tell you how this is going to trade, and so on and so forth. And then you have all those other little details of the dead zones in between. So those are just little things I've been picking up over the years of trading. But when you start to get the Asian session, like look at this, straight down. I wonder how many pips this is. This is 30 pips. But was this market consolidating? No. It's not in a clear consolidation. This is a trending Asian session. We don't want that. We have to have the two in a line. We need to be in a phase of consolidation and within that 20 pip increment to 40 pip increment. So hopefully that answers your question. Because when you start to see the market start consolidating, and I want to start picking every single day now because I could sit here and take a while to find a good example for you. But like I said, you have these charts available to yourself. You go back and back test them yourselves. This one just meets it. It is trendy still. Comes up and trends down. It's still trendy. I want from start to close. I want it to be ranging back and forth, back and forth, back and forth, back and forth, back and forth. Let's just see how the London session trades out. You can see it just trades right down. Right? This trades right down. At the open, trades right down. Most people are not catching this because we're all anticipating power three, right? Accumulation, manipulation, distribution. Each session has its own power three. It runs above its open or drops below its open, makes the manipulation below the open or above the open, and then distributes the opposite way. And that's what power three is talking about. And this would have been a good example, but London fails to continue running back up higher. Let's see the pip range. Doesn't even look, just gets to 20, 19.2. 19.2. London probably wasn't ideal to trade, but New York was trending, very trendy. So hopefully that answers your question. Do you have any YouTube videos that explain more on your entries? I do. I definitely do. If you go into the playlist here, um, this one talks about a simple entry technique. If I were to go back here, the other playlists, like all the lessons, everything that I use and I talk about is in these playlists. All the playlists. High odd reversals. This talks about London close setups. If the data range, how I like to use it and blend to higher time frame bias. High probability buy setups, how to find buying opportunities here. Sunday's opening price, the daily draw, premium versus discount, the New York model, and its entry techniques. Entry techniques for swing traders. The turning points. This is also another entry technique. This is the Larry Williams concept here. And characteristic, and here as well, characteristics of a bullish and bearish month. So it's all there. I have the videos in detail, but you normally get to see it in action in the Telegram channel. Everybody asks me, do I sell a course? Do I do one-on-one mentoring? I do not do any of those things because I don't have time to do it, and I don't want anybody's money because I've been scammed, and I don't want to ever put anybody through that fear of, yo, I'm about to give this guy my money, and I'm paying a lot of money for this guy to teach me how to trade, but I'm still not profitable. I I think a lot of people have come to the realization, even though you pay for a course, you can still be unprofitable. People are charter, doesn't matter. Like it's so funny to me. The industry is so funny to me. Everybody's like, "Oh, this guy's charter. This guy did ICT's paid mentorship." There's people that went through ICT's paid mentorship for 12 months, got into charter because charter is just another fee. How to get into charter? Simple. Pay for ICT's content from month 1 to month 12 monthly, per month. You're paying him every month for 12 months. At the last month, you pay an additional fee to be added into the ICT charter program, which was $200, and then you're chartered. Boom, that's it. Now you're just a part of a community. That's it. Lifetime, of course, but already by that time you've already paid thousands of dollars towards this, given to Michael, of course. Granted, the education is solid. It was well structured like a course. I would truly tell you that it was well structured like a school, like a course, which is why I believe a lot of traders have troubles with ICT's content because they have free will to skip anywhere they want. They could go on ICT's channel and skip to month 6. When you were in the paid program, you couldn't skip to month 6. You had to get access by Michael. Michael had to click a button to allow you to move on to month 6 until whatever group of people that came in, you guys all moved together. And then you also had the daily reviews, or the weekly recaps with Michael and stuff like that. Those definitely was it was definitely well thought and structured like a course. So was my money well spent? Yes, of course. But I don't want people to get confused when they hear someone saying, "Oh, this guy was charter." It doesn't mean anything that you're charter. People still went through the whole ICT paid mentorship and still can't trade. Want you to know that. And now all the information is out here for free. People still can't trade. So what does that tell you? It's the user, it's the operator, it's not the content, it's the comprehension of the material, one. And also I would put some pushback on the teacher as well, because the teacher needs to be very specific in what they're telling somebody and show them great examples of how to find this. There are still things that I personally don't do well with ICT, like the whole COT data stuff. I don't utilize that too much. I used to get into the Asian session range stuff. You don't hear me talk about Asian session range standard deviations. I used to talk about that stuff years ago. I don't do it anymore. What is it called? Central bank dealers range. I used to talk about that. I don't do it no more because I find it to be pointless in my trading model, at least. I don't talk about what is it? Flout, which is CBDR plus eight Asian standard deviation. I don't talk about that stuff anymore. Because why? I just didn't find any use for it. But the other things that I did, I pushed against it. I kept studying it, and I was like, okay, this makes sense. Which is my biggest breakthrough, IPDA. IPDA look back data ranges was one of my biggest breakthroughs personally. That was the first model or concept that really clicked for me. The order blocks, so. All the PD arrays were so for me. They were all so. The fair value gaps, okay, cool. But when I got to IPTA, I was like, oh crap, this makes sense. And then that's when I started to learn how to swing trade. I was like, okay, I think I'm gonna be a swing trader because this is much more easier. But I ain't never gonna try and make you conform to one form of trading. You gotta find what works for you and your lifestyle. I don't know where you live in the world. I don't know what industry or job you have. I don't know if you're married. I don't know if you have a girlfriend. I don't know if you have a boyfriend. I don't know if you got children. Whatever it is in your case scenario, I don't know what you got going on. You got to figure it out for yourself. I went through the trials and tribulations for years. Year 1, year 2, year 3, year 4, year 5, year 4 and 5. I was like, okay, things are clicking now. I was like, okay, this is where I really want to be. Year 5, year 6, now present day, I'm like, okay, this is Deontay. This is forensic forex. Ain't nobody can tell me what my model is no more. I got it on the back. I know it like in the back of my hand. I know it. And that's where you gotta be too. But it takes time. It's not something that happens overnight. It's a consistent thing. The Asian session model. Think about that model. Mm, what if I go on Instagram to show it? I would have to log into Instagram to even show it. Ah man, that would suck. But if you view the playlist, You go through every single episode, they're not different. Even though people still ask me questions about the model and questions about the entry, I just refer to them and tell them keep watching all the episodes because they're never going to change. They're never going to change. That's how consistent I am to it. It's always going to be the same. Episode 27. And this series is never going to stop. I really do wish that this series does go down for something big in history in the community, just to show people that Asian Session 1 is a session that can be traded. 2, it's very simple if you actually just frame up the right liquidity pools and just look for the right entry and use the right pair. So I think I'm gonna cut it there. Unless there's more questions. If there's more questions, I'll keep going. I don't mind. Like I said, it's all will be posted on YouTube. I'm creating agent because of my job, and your teaching is exactly what I needed. No problem. Yeah, agent session is really beautiful. Honestly, I'm so glad to have brought it to the community. And how was I influenced by this model? And I'll tell you which video it is. I'll show you right now. This is the video where it all started. This idea. So like I still give credit to ICT regardless. This is it. This is where it started. I watched this video. Where is it at? Here. Right there. You can see in that little let me just zoom in. I don't want to click the video. But if you zoom in, you can see how he's talking about it runs some type of high, go short there. Look for at least 20 pips. And it wasn't enough for me because he didn't give a real specific entry. I mean, he did kind of go into detail about it. And even in this video too, he spoke about it for the New York session. So let me go over here, right around here. Look at that. The trading the New York expansion, same thing as well. Same thing. It runs the swing. Look, it runs sell side liquidity. Then, at some reason, it runs up for 20 pips. But I didn't like the entry technique he was telling me about. Right? I didn't. It wasn't specific enough. Obviously, this was his free YouTube stuff, so he wasn't giving a lot of effort into it. Of course, just quick, easy, put it out there, get monetized for it. Get thousands of views, whatever. But this is where it started, and I was like, okay, there's something here. It could be more than 20 pips. I can have a better entry. I can optimize this. I can find better days to trade the model on. And that's where I went from there. And it took me about 2 weeks to figure out this pattern. I was like, okay, every time it breaks this swing high, it creates this fair value gap. And then it hits this fair value gap and then it just sells. Okay, every time it breaks this swing low, it breaks the swing high and then creates this fair value gap. Then it buys. I'm like, okay, there has to be something here. And I physically started printing out the examples over and over and over again because I thought I was mad. I thought I was seeing things. I was like, there's no way that this market is printing the same model over and over again during Asian session. And then soon enough, I had almost like 50 examples of the Asian session model. And I was like, okay, now we got to really start testing this stuff, right? We got to start back testing it and seeing if it would really hold up to market expectations. Because it's one thing to watch it happen, it's another thing to actually take a trade on it, even if it's demo, especially if it's live. So now I start demo trading it, and I was like, wow, I can see the power of this. So I risked 1% per Asian session. I could be up 1% of my account. Okay, now I can slowly start compounding this. Okay, 1% turns into 2%. 2% turns into 3%, 4% turns into 5%, 6%. Okay, now I've already compounded 6% per month within 20 days. That's fantastic. You compounded 6% of your equity in 1 month. You got 12 months out of the year. Do the math. That's great compounding. So it's all where you start. It's the small wins. Everybody's biting off too many big bites. Bite off a small chunk and see how that tastes. Oh, you don't really like this model? All right, try it out. Try it out on a pair. But don't try it out for one day. Like I said, people would try the Asian session model and then run into a day like this. They'll run into a day where it only gives here, it hits stop loss. Then they'll come and text me, DM me, oh, it doesn't work. Well, it does, because I've been showing it from the beginning of the year. It does. You just got to be truthful with people. Until you actually put it out there for them, then they'll believe you. And hopefully people will start to open their eyes slowly to it. Um, yeah, man. Really passionate about it, of course. I love teaching in general. Um, but I'm really passionate because I want everybody to win, and I could just see it's just disgusting. The ethics and the morals and how people make money in this industry is really disgusting, and I just want to be a safe haven for people to come talk to and share results with and just get some ideas with, you know. So yeah, man, forensic forex. How did I come up with the name? No idea. No idea. All right, I think we did a good job tonight, fellas. I don't like live trading on YouTube. There's no point. I want to be focused. If I could take live, I could take live trades and then post it after. Yeah, no problem. But I don't see the point of live trading and streaming it. All right. If there's any other questions, just let me know. Every time this thing moves so fast, do you think I can use the same way London and New York? Yes, you definitely can. It's not an everyday thing. This is something I haven't studied myself, but I partially studied some of this stuff. The London model, the New York model, the Asian session model. It's a very algorithmic price action movement. The pattern that I'm talking about, that pattern, sweep, raid, purge, buy side, revert to sell side, or vice versa, purge, sell side, revert to buy side. It's a very algorithmic pattern. It doesn't happen every single day on the pair that you're looking at, but it definitely happens every day on other pairs and other asset classes. Do you want any checklist to look into before taking it? Do I have any checklists? Yes. Day a week. So what day is it? Is it Monday? Okay, I'm not trading. Is it Sunday? I'm not trading. Okay, it's Tuesday, Wednesday, Thursday. I'm trading. Great. Other checklists, intermarket analysis. If I am speculating, let's say UJ to go higher, I need to check directly correlated assets like UCAD and USWISSy to also be providing context that it's going higher as well. Vice versa to that, I need to also be checking inversely correlated pairs. Is EU, GU, AU, and NU going opposite to my speculation? Great. So those are some checklists as well. Outside of that, I would be looking at the bond yields, right? The 2 year, the 10 year, the 30 year, and the 5 year. Mainly the 2 year and the 30 year. I would be looking at 2 years, very short term and quick. Outside of that, what other checklists I would be looking at? Um, the range cycle. There we go. So if yesterday was a large candle, a very large candle, I'm not trading tomorrow for a day trade at least. Right? London and New York. I don't even trade London and New York. It's so funny. I talk about it as if I trade London and New York, but I don't. I just trade Asian session. I avoid both those sessions, and it saves me a lot of time and it saves me headache, honestly, because London is the hardest session to trade. After that, the next hardest session to trade is New York, and the least hardest session to trade is Asian session. Asian session is the easiest session to trade out of the three main kill zones. You also have London close, but I don't prefer it because I think it's also difficult as well. It kind of ranks right between London and New York in its difficultness, but I don't trade those. The filter I was talking about was small range, large range. If yesterday was a small candle, I would and it's down against the trend. If it's bullish, I'm definitely looking to trade tomorrow. If I have the confluence of all those things aligning together, if I'm going into a Tuesday and yesterday was a small range candle, I'm looking to buy. And I've shown that time and time again in the Telegram channel. Buy after a small day, buy after a down day, sell after an up day, and it shows results. Never thought I would hear a trader. Yeah, me either. Kenny, I honestly personally would never have thought from the beginning I've started trading to now, I never thought I would be an Asian session trader. Honestly. Everybody kind of poops crap on it. But Asian session is I'm telling you this right now. Asian session is the easiest session to trade out of all the kill zones. Out of all the kill zones. Why is it the easiest? Because it mainly consolidates. That's the big factor to it. It normally stays within a general price range. It will run down and then run right back up inside a general price range. London and New York will gyrate so much and pull traders to one side in one direction so hard. It's difficult. It's very difficult. Asian session is easier because it's a smaller pocket of range. Like I said, that the max amount that I would want, that's why I have it maxed out at 40. I did this on purpose. I have it maxed out at 40 for a reason because I know the Asian session at times can go up to 40 pips, and then 20 would be the very ideal situation, and then 15 is the realistic expectation. 15 pips. 15 pips is the very realistic expectation. 10 easy. Easy across the board. 10 pips out of Asian session, peasy. That's too easy. 15 pips, now you're working with something. 20, oh, that was a great Asian session. And anything beyond 20 and going up to 40, that's just a cherry on top. If you get 40 pips during Asian session, man, you had a great trading day. And you can move on to the next day, next trade. So that's a couple of the filters. Hopefully that answers some of your questions. Let me go back up. Let me think if I have any other ones before I end. Outside day bars. So I learned this from Larry Williams' book. If you get an outside day bar, meaning, let's see if you can find an example. Here we go. Okay. There we go. Even oil had one too, and I talked about it in the daily bias. Um, this is an outside bar. Why is this an outside bar? Because this candle takes out the previous daily high and previous daily low. Larry Williams said that there are two candles. And when I started to study this, I was like, wow, I can see how this tricks up retail traders because their logic is based on the highs and lows. And when you get both the high and low broken, their brain kind of, starts to malfunction. You start to see the black smoke come out of their brain because they're like, wait, it broke both sides. What's going on here? When it does that, I would say this is where the market is most likely going to reset itself. That's how I like to look at it. It's going to reset itself. This candle now, you want to watch this candle in its range and see what side of it is broken. If the high is broken, odds are it's going to continue going up. If the low is broken, odds are it's going to continue going lower. That's just a general, quick, low, dirty approach to it. But if you read, like I said, read the book. Got to read the book. Read the book, the whole book. There are still models in the book I don't understand, and I'm still trying to compute together. I read the book every couple months, Every couple months I'll go back, reiterate some things, sharpen some of the information, and then I'll try and look into another model that he talked about and try and find examples. And I'm like, okay, I love this example. This is a good one. And then I'll try and back test it and so on and so forth. But yeah, outside bars. And then the second candle that tricks retail traders are inside bars. So candles that fall inside a candle's range. So I think in recent time, I had proved it with US oil in the daily updates. I said, "Oh, we got an inside bar." I said, "You should wait to see what this candle does." Let me see which one was it. January. It was this one. There we go. Ha 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 ha. It was this range. So bring it back. It's the same idea that I just told you about the outside bar. So the second kind of candle that tricks up retail traders are inside bars because it doesn't break a high or a low. So you can see how this candle is inside this candle's low. This candle is inside this candle's high. A lot of information in my head. I know it's crazy. Um, this is an inside bar candle. Candle that's highlighted here. What I would wait for, I said, and on this day, I told traders, I said, hey, I don't know where price is going, but all I know is after this candle here, I wouldn't trade Wednesday. Even though it's an ideal trading day, I wouldn't trade because I got this characteristic of a candle. Doesn't break a high and it doesn't break a low. It's not decisive yet. The next candle or even the following one, it needs to break this range. So what happens the next day? Price breaks the high. So what did I say after that in the daily updates? I said, okay, since we broke this high, we got out this range. I suspect price to get back up to the previous daily high here and break this swing high here. Break that swing high here as the target. We play it forward, and that's when we got that purge right there. So if you go back on IPDA look back data range, this is like my main. This is my main layout that I'm looking at all the time. And this is the one I have the most annotations on. I had deleted it. Yeah, I had deleted it because I wanted to keep the chart clean. But yeah, I had that inside bar here, and then price ran up and took out that high here. And I even then so we have the same thing occurring. Still looking for a price to take out swing highs, trade higher. We got a down close candle here on a Friday. I would like to see, and we got a small fair value gap here. I want to see either Monday, Tuesday, or Wednesday keep trading up and taking out previous daily highs. If this market's going to continue trending higher, it should take out the swing highs, not the swing lows. Protect in a bullish trend. What do? We protect swing lows. We protect swing lows. Yes, you'll have that occasion where we get the raid. We got to live with that. And then markets will continue. It raids it, and the market will continue going in where it really wants to go. We can't always have it perfect, but we can get close to the answer as possible and capitalize on that opportunity. Notice it just looks just like GU. At the beginning of the year, it's still range bound. But it's subtle things that I'm looking at to get an edge above other traders. It's the swing points that I'm looking at. These swing points here is all I'm looking at because that's what makes the market. The market's primary goal is to do three things. It's going to create swing lows and swing highs. And by that, it's creating liquidity pools, right? This is a liquidity pool. That is a liquidity pool. That is a liquidity pool that got raided. Same thing, vice versa. Swing highs. This is a liquidity pool. This is a liquidity pool. This is a liquidity pool. This is, well, this, if it is going to be a swing high, liquidity pool. It just keeps creating liquidity pools. The second thing that the market is going to do, it's going to target these liquidity pools. That's all it's going to do. Why is it going to target these liquidity pools? Because that's where the orders are residing, the buy stops and sell stops. It's that simple. Don't overcomplicate it. Even if we were to jump down onto the weekly, it's the same thing. Look at all the swing points. Look at how it's trying to run that swing low. Swing low runs this swing low, runs it. And ever since then, what happens? It's protecting that swing low. It doesn't ever, oil does not get back down to the swing low. Could we? It's possible, but it doesn't get here. It doesn't get there. Creates this swing low here. In the near future, what does it do? Comes down, takes out the sell side liquidity below that swing low. While doing that, it probably created a swing high or a swing low too. Created a swing high. Liquidity pool. Liquidity pool. Look at that. Lower swing high. Lower swing high. Swing low forms. Lower swing low. Lower swing high. Lower swing low. Lower swing high. And right now we're in a what? Accumulation phase. Look at the weekly. The weekly has gone nowhere. Same thing like this. Same thing just like this. We're bound to do what? Trend. Whether that's up, whether that's down. I don't care which way it goes because I don't mind getting it wrong. That's the whole point. I want to show people how you can read it day by day, week by week. It's okay. Even if we were to jump this gold, it doesn't matter. Doesn't matter what we're looking at. Go gold monthly. Look at all the swing points on the monthly chart. This is powerful, right? Because we're going up, increasing the time frame. Look at how price comes down, takes out this sell side liquidity pool, takes out this sell side liquidity pool, this sell side liquidity pool, leaves this one open though, and then it runs up. Protects this one for a very long time. 2018, the swing low. Even that one too, 2016, swing low, protected. What does it do? It runs a swing high here. Look at oh wow, it's so crazy. When you see this, look at the formula. Go back and watch the daily bias recognition videos. Look at the formula unfolding here on the daily time frame. It's all fractal. What's this? Swing high broken. What does that call for? Bullish momentum. Bullish momentum. Even with that too, we also get that same entry technique. What is that? Fair value gap through a swing high. Price comes down, creates the higher swing low inside of it. You'll notice that the swing points are forming inside the inefficiencies or around the PDA rays, normally the order blocks, the breakers. The mitigation blocks, the volume imbalances, anything that's inefficient, it's going to create that turning point around in it. That's the inefficiency. It makes the turning point inside here. I'm not trying to predict how far inside this inefficiency is going to do it. I just know in this general region, it will do that. Breaks the swing high, creates what? A higher swing low. I'm gonna double check that's not a double bottom. This is actually the swing low. I can see it's lower. Yep. Low point. Low is 1200. 12. Yeah, this is lower. So that's the swing low. It's higher. And after printing, this is the monthly chart. Think about the same filters I'm talking about now at this point. After getting this higher swing low confirmed, what should you wait for? Down month. So let's wait for a down month. Let's see if we get a down month at any point in time. Market is very extended though. Let's see if the same theories can apply here. Oh, come on, monthly chart. Down month. So we got a down month. What could we do here? We could buy after this down month, right? It's almost like we had 2020 vision, or we're using this to be a fortune teller, right? To predict future price action based on the filter. Down month, let's wait to buy after this down month because we got the higher swing low confirmed after breaking a swing high. Let's see how that results. Great buying off the start, right? Imagine, like I said, you've already been ahead of the curve. Now, many traders would argue and say, "Oh, but that's risky." It's not risky unless you're risking too much. You buy at the close here, and you buy at the open there. If not, you go in a lower time frame and you wait for down days inside this month. October 20, October 2019, you wait for down days. Let's go into that. Let's go into that day. Let's go into let's go inside that month itself. Let's just look at how it's forming. Now, I don't know if this month ends up or down, but with the idea of what we're talking about, let's just see if it proves itself in theory here. We got a down day. Let's buy after this down day. Profitable. How did I know that? Because it's common sense. Because I know how the market forms. Another down day. What could we do after this? We could look for a buy opportunity. Let's see what happens. We got another down day. So let's say we take the loser here. Down day, it's another opportunity. We take a winner. Down day, let's try and buy after that. We take another winner. Now the market. Let's see if the market is going to continue this trend. Now we got two consecutive up days, and we're creating a swing low formation. Down day, let's try and buy after that. Take a loser. Down day, buy. Another. Now the market looks to trend again, creating what? Another swing point. Purge revert. Let's see if it's going to continue to take out swing highs. Now got clean highs. Okay, I like that. Down day. Let's try and buy after that. Let's see what happens. Oh, we take the loser. We buy after this as well. Profitable. And look how it gets right back up there. And that's the end of the month. So it doesn't take much for me to know what days I should be buying. You see how simple that filter was? Right? I'm just flipping the coin. I'm going to be wrong at times. I'm going to be wrong. But notice how easy and simple Deontay came to that conclusion. Oh, the day was down. He's bullish on the month. So he's just going to wait for down days to buy. And at times, this is very powerful. It's very powerful. It is very, very, very powerful when you start to see that. And everything I just told you is vice versa. You figure out the bearish trend, you wait for an up day, sell after the up day. You sell after the up day. Look at all these, just look at this trend up. Look how powerful it is if you were to just wait for one small down day and buy after it. You're light, you're light years ahead of retail traders in the way they think. Nobody thinks like this. I don't see nobody talking about this on Twitter. I don't see nobody talking about this on only Larry Williams was talking, and Larry Williams and ICT was the only ones really talking about it. And these are small things that go unnoticed by the community because they're looking at all the flashier things. You know, when people first kind of get to know me, they're like, "Oh, they kind of know me for IPDA." I'm like, "Okay, that's great and all, you know, but that's not the end all be all because it's more than that. It's a combination of everything and everything that I've learned. And if I had to say which one was more powerful, it would be small range versus large range. That was eye-opening for me when I read Larry Williams' book. And I know ICT did speak on it too, but Larry Williams was the first person, at least that I've known, speak about it in a book, and it was really powerful, really really powerful. Same thing, filters to London. If you get a large day, don't trade London the next day. Simple. Small things. I don't have all the answers, and I will never have all the answers, but I just need enough so that I can hit a certain threshold to maintain profit, to maintain turning over and compounding equity. I don't need to know every single thing about the market to be profitable. Everybody's so specific, and I need to know COT data. I need to know seasonality. I need to know IPTA. I need to know order blocks. I no, you don't. I'll be honest with you, you don't. You just don't. You need one model. That's the only thing I have posted on my Twitter, and the only thing I have posted on my Instagram. You don't see me post anything because what I posted is enough. What I said is enough. You need one model. Stop breaking your model. Find that model. Find the unicorn that allows you to escape reality. The Asian session model has allowed me to escape reality. You think I deal with London anymore? No way. You think I deal with New York session anymore? No way. I have a lot more time available now. I'm not a desk jockey when it comes to trading. That's not me. I'm a desk jockey when it comes to teaching trading and educating people and light shows and editing videos. I should get better at editing. I suck at editing because I'd be rushing so much. Um, that's when I'm a desk jockey. But everything else, when it comes to going down to my personal trading plan, I'm not a desk jockey. I made it so simple in 2024. I told myself that I was going to be the most simplest trader I know. And that's it. I'm never gonna break my rules ever again. I'm never gonna disobey the Asian session model. There are times when I knew the formula and I went against my own formula, and I had to sit there and look at the chart play out exactly how the model was created by me. And I had to look at myself and like, Deontay, you are so silly. You have a model and you abandoned it. Why? Because of this guy said something, or because this girl said something, or whatever the case may be, whatever it is that steered you off course. Why did you abandon your model? And now you're looking at it play out in front of your face and you can't even trade it. You know why? Because you're at max drawdown for the day. And now if you go against max drawdown, what are you going to be doing? You're going to be over leveraging. You're going to be down more than 2% in your account per day. Now you're going to blow your prop firm account, right? We've all been there. Not saying I'm perfect, and I'm not saying I'm the most profitable trader in the world. I'm not. I don't want to be. I don't want to be known to be these guys that are going on these on these interviews and these I don't want to be that guy, bro. Too much pressure. People don't act like themselves when the cameras are rolling. Reality is not reality when cameras are rolling. People act like a whole nother person, put on a whole different persona, different facade, especially in those interviews. You watch those interviews with all those millionaire Forex traders, you could tell some of these guys got on a facade, bro. You could just tell. You can see right through some of these guys, man. But take it take it day by day, man. I said a lot today, man. I'm telling you, I didn't get to where I am in the knowledge by just sitting on my butt and playing video games at home and talking to my girlfriend all day. Or I didn't do that. Like I said, I sacrificed time, Even like I said, even my shorty knows, even my girl that I'm with right now, she knows that this is so important to me that there's some. I'm like, hey, babes, yo, I can't talk to you for like the next 2 hours. Yo, I got to record this video for the chat. Yo, babes, I can't talk to you right now. I'm focused. It's Asian session. Yo, babes, do you want to join me for Asian session? Let me teach you how to trade. And she's learned. She's been learning it too. You know, she don't got no skills on trading, but she definitely know the Asian session model because it's that easy. You can teach anybody, anybody. They ain't got no background in trading at all, but I guarantee you, you give them those 3 steps and you allow them to repeat it every day in, day in, day out, they're gonna get it. It's like cake. And that's all they're gonna know. And then you're gonna build machines. You're gonna build somebody that just all they know is Asian session model. All they know is New York model. All they know is London model. All they know is buy after a down day. All they know is sell after an up day. And then simplicity starts to flow. And these people start to becoming way better traders than people that have been trading for years at a time. It starts from somebody though, of course. Somebody has to set the path. Not saying I'm that person, but somebody has to be that role model, or somebody has to set the path for other people to walk down and say, "Okay, this is correct, and I love it. I need to educate other people about it as well." Or if not, you keep it to yourself, you make your money, and you go about your day. You live your happy life wherever you are. You make it out wherever you are and you're not happy with your current situation, you head down, stick to the model. I don't care what they talking about on Twitter. I don't care what they talking about on TradingView. I don't care about this next prop firm guy. This you don't care about those people, bro, because they're not paying your bills. Think I care about ICT? You really like in real honesty, do you really think I genuinely care about him like that deeply? No, I don't. I appreciate the information. Thank you. Goodbye. That's it. In and out. And I wouldn't mind if you guys as well treated me that way as well. Yo, Deontay, I'm here for information only. That's what you're here for. You're here to learn. That's it. In, out. You don't idolize people, bro. That's not how it works, man. We all the same. We all born, bleed, and die the same. That's it, bro. That's it. I'm gonna leave it off on a high note. Leave the indicators alone. Not sure if you already said this. What is what difficult? It was the timing. Timing. That was my most difficult trading. It was finding the model. I found the model. I'm done. That was the most difficult thing for me for trading. It was finding the model that was the easiest for my lifestyle. That was my hardest thing. I was sacrificing a lot of sleep. So, very sleep deprived, missing, not even getting 6 hours of sleep, only getting 3 hours of sleep, then running to class, trying to do exams and doing this. I just didn't have the time. And if, like I said, if I only had knew this model 6 years ago, man, man, the sky is not the limit anymore, you know? You're not held back anymore. You could do a lot more things. You have a better lifestyle, you know? You can work out more. You have time for your family. You have time for your kids. You have time for your wife, your girlfriend. If you're a shorty in here, you got time for your boyfriend, whatever, your husband, etc. You got more time because it could be troublesome, you know? Imagine, like I said, you gotta have man, this life stuff ain't no joke, man. I'm only 25 years old, and I'm just like talking like if I'm old. My pops is always right, bro. You gotta have a balance. I don't care what anybody tells you, bro. You're a human being at the end of the day, man or woman. It don't matter, bro. You need to have a balance, bro. For your physical health, for your mental health, for your spiritual health, financial health, you need to have a balance. Because if you don't got a balance, one thing is gonna teeter tot to the other side, and it's gonna stumble into other things. Everybody wants a girl, right? Everybody wants a partner, right? Everybody wants a boyfriend, everybody wants a girlfriend, right? But they ain't got no time, right? You ain't got no time to talk to your girl. You ain't got no time to talk to your boy. You ain't got no time for your children. You don't think that's not gonna impact their life too? 110%. If that's what you want to do, if you got into a relationship with somebody, if you have kids with somebody, you need to make time for these people. You being their counts as well. It's bigger than that, and I'm so thankful for my parents, They were always there for me, regardless of what they've been through, A little background story of mine, because if you guys wanted to get to know, my parents are from Barbados, so I got a little Bayesian blood running through me. My parents worked. My dad came to America, full ride scholarship, playing sports, playing tennis, full ride scholarship to Jackson State in Mississippi. My mom went to somewhere in New York, I think like New York Tech. I forgot where she went. And yeah, they worked their butt off, 1 bedroom apartment in Brooklyn, worked their butt off, and had me, had my brother. They grinded their head off. I watched them work their tough day in, day out, and when it came time for their kids, they were there, bro. My dad was at every football game, every lacrosse game. My mom wasn't there because she was working nights, of course. But when I came home, my mom was there. She cooked meal. How you doing? This, six, and third. They were there. That's important, bro. Those things are important. It's big. It's bigger than trading. It's bigger than trading. Yes, money. Yes, money. Money, 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 money. It's bigger than that, though. We need to figure out how to balance it. You can spend the next 40 years of your life, because most people don't live to 100 years old. Most people don't got good genes, most good eating habits. They're stressed out. They don't live to 100. Imagine you 60 years old. You only got probably like 10 years left, bro. Think about that, right? My parents right now are in their 50s. Now, if we had to think rationally about this, obviously I would love for them to live forever, but we know that's not realistic, right? My dad is in his 50s. He probably got like good 40, 30 years left in him, right? I definitely want to see my dad a lot more often. I don't want to be sit here strapped to my desk every day. I don't want to be strapped here sitting to my desk every day and I want to start a family with my girlfriend. I don't want to be. You got to pick and choose, man. Got to pick and choose, bro. Pick and choose. Gotta pick and choose. I Kenny, respect to you, dog. Respect to you. You probably know you older than me. You got bigger shoes to fill than I do, you know, and I'm not even there yet. Respect to you and your family, man. You got to figure this stuff out, bro. Especially you're a man. I know most of y'all are here are men. Especially you're a man, you know, being a provider, you got to figure it out. And you got to figure out in the most optimal way as possible, you know? You ain't trying to disrupt the whole family tree. You're not trying to disrupt the whole ecosystem you got going on. Trying to make sure your shorty's good. Trying to make sure your daughter's good, your son is good. But how could you do that if you're not available? It's hard. And that was my biggest hurdle. And I kind of figured it out. I had to keep it simple. I can't be looking for all the pips in the world, bro. I can't. I don't have the time to do that, bro. I'm still trying to keep fit. I'm trying to lose weight too. I'm trying to keep the muscle on. I'm still young, but I'm still trying to keep that youthfulness in me. I got to spend time on my body. I got to eat right. I got to get my education on outside of my bachelor's. I still got to read books. You know, my father said, "A thinking man is always a wise man. A man that has education is always going to get further than the man that doesn't have education." I still have to read books every other day. I have to make time for that and myself. Then I got to make time for my shorty. Then I got to make time for my little brother. Then I got to make time for my mom. Then I got to make time for my best friend and our business. It's hard. So I can't full time trade as much as I would like to. I was full time trading and it was difficult. Honestly, I'm not gonna lie. London was difficult to trade. I was missing sleep. You know, I was missing sleep. New York was difficult to trade. I was missing sleep and I was working a job too, so I was tired at that time. I couldn't do it. You know, until I finally got into a groove. I was like, you know what? I could do this in a much simpler way. Let me start swing trading. Start swing trading. I was like, okay, now I got it. Now I can replace my 9 to 5 a little faster than I thought I can. Replace the 9 to 5. Cool. Get out of that. Now start taking profits. Start milking these prop firms. Yeah, who knows where the prop firms are going to be? But while they're here, I don't care what the deal is with the prop firms. Everybody could talk about rah rah this, rah rah this. If they are here, utilize them. If you got to spend a band to get 100K worth funded, milk them. You got to spend 2 bands to get 200K, milk them. You got to spend $100 to get 10K, whatever it is. You milk the prop firms as much as you can while they're around because obviously it's a game to get back a lot more money than it is to risk your real equity because it's a different story to go take your life savings, put it in a live trading account, and wipe it off in 6 months. It's a whole different feeling. So I personally stand with the prop firms. I truly do believe prop firms can be a way out for traders that need more equity to start building their live account and to start positioning money into other things besides just trading. Whether that is putting money into a family business, you know, or starting a business with a friend or your spouse or whatever, or acquiring land, whatever it is, whatever route it is, just figure it out. We in 2024, dog. Y'all gotta get to this money. Inflation is no joke. We already live in a system that is corrupt and not legitimate. From a very young age, I don't know when it clicked for me, but I knew that the world just wasn't right, especially for certain people. And I ain't gonna get into that, but we know already the world already has certain strikes against certain people. So you got to work your butt off 10 times harder. No excuses, of course, but you already know you got to work your butt off 10 times harder. So you ain't got no excuse. So you got to get there. You got to put in effort day in, day out, day in, day out, day in, day out. The months add up, the days add up to weeks, the weeks add up to months, the months add up to years, and then you win life. You win life. You guys are already successful in the ways you probably don't think you are. You know, I'm already successful. It's not that I have millions of dollars in the bank account. I'm successful because why? I'm living. I have a loving girlfriend. I have a loving family, loving father, loving mother, loving brother. I have a great friend. I have great friends. I built a great community in the trading world. I won. What else more could I ask for? I can't ask for too much. At this point, I just want to give. I already won life. Now, did I win it on a financial standpoint to where I want to be? No. But as a holistic standpoint, yes, I won life already. I got shelter over my head. I could help pay my mom's bills. I could pay my dad's bills. My brother, I could do those things. That's it, man. It's tough, man. It's tough out here for sure. Yo, yo, what a night, man. What a night. All right. Every time I keep saying I'm done, I keep going for another 10 minutes. Nobody say nothing. Please don't text. Wow, it's 12 a.m. Oh shoot. It's 12:17. All right. Yep. It's your boy Deontay signing out. Love. Everybody, safe trading. Enjoy the weekend wherever you are. Head high. Move with confidence. Be courageous. Do the right thing when nobody's looking. Peace.